Ladies and gentlemen, good morning and welcome to Shift Money 2020 in partnership with the Singapore FinTech Festival. Now, I say to you, good morning, but the thing is, I'm sure many of you that are tuning in right now, wherever you are around the world, maybe you're waking up, maybe you're having lunch, or maybe even some of you actually going to bed. So wherever you are, whatever you're doing, welcome to Shift Money 2020. Now, here's the thing. I don't need to stand here and tell you or explain to you how difficult this year has been. 2020, very challenging indeed with travel restrictions, the pandemic, global pandemic everywhere we go, being able to do many things which we can't do anymore. But the thing is, here at Shift, we're actually able to do many things even more and even better, in fact. So here we have 60,000 people, fintech professionals with us right now, beaming in across the world. Before we go any further, just let me introduce myself. My name is Peter Hopwood, and I am your host for the next 2 days here in Shift Money 2020. 2 days of debate, 2 days of discussion, insights from everything from the future of payments to insurance to lending to blockchain and pretty much everything in between as well. So again, Croatia, a growing hotspot in terms of a fintech hotspot here in Southeast Europe. And also a chance to really connect the Croatian ICT community, the IT community financial hub right here in Croatia, with the global Singapore FinTech Festival community as well, creating opportunities, creating innovation, and also creating discussion as well. So very excited indeed and intrigued to see how these 2 days unfold with us right now. Okay, so now here's a few things to remember in terms of the COVID-19 measures. There are many things that we have actually put in place to make sure everybody here who's physically with us safe in these spaces that we're in right now. So just go through them right now. So actually, remember everybody coming in, there are thermal testing as we enter. Everybody's been given masks as well, cleaning across all services, distancing, very important indeed, 1.5 meter distancing, so that's for everybody here as well. We've also got the cleaning of surfaces, and we've got wipes for everybody who needs them also. And remember, the microphones and the equipment, all this is actually wiped down as well. Those are the things that we've done here at Shift, but there are many things you can do here, those of you physically with us right now as well. Things that you can do. Again, remember, 1.5 meter distance between you. Remember that. Again, no group photographs. Group photographs, again, trying to avoid crowds together, so we avoid the group photographs. However, we would love you still to take pictures. This is an event, again, that really maybe almost didn't happen. So it's very important for us and within the fintech community to really share ideas, insights, things you see here. Even take a picture of yourself looking at the screen wherever you are in the world and share that on social media and let us know exactly what it's all about from your side. Again, no handshaking. We can have fist bumps, elbow bumps, any other bumps you might like as well, but please no shaking hands. We've got also an opportunity to clean our hands as much as you like as well. And remember, everybody wearing these masks also. Something very, very important for us here as well. The maximum in each space, in terms of attendees, is 25. We will control this as much as we can, but you can help us. You can help us. If you see you're entering a room with more than 25 people, please don't enter that room. And that will help us dramatically. Again, remember, the Singapore FinTech Festival, we're honored and we're happy to be partnering with this fantastic global hub. So again, streaming across the world, really putting Croatia on the map in terms of a FinTech event hub as well. Remember, there we are. That's the login for those of you who wish to log in straight away with that. And once you've logged in, this is what you'll see on your screens. We try to make it as simple and as easy as possible to navigate. Everything is there. And remember, there's also the chat function, the chat option on the left-hand side. So that gives you an opportunity to really engage and talk with the speakers that appear here on the stage. Again, remember, we have our hashtag Shift Money. Again, share your photographs, share what's happening here on stage, share those within your communities, within your networks. And again, somehow we can just make this little event that we have here with a maximum of 25 people in front of me, actually share that out across the world. Remember our breaks, 12:55 to 1:30, and then 3:15 to 3:45, 2 of those throughout the day. And we move on to the next screen, absolutely. Again, our sponsors. Now, an event like this doesn't happen overnight, and certainly in the challenging times that we have right now. So we take our hats off to all our sponsors who made this possible. Without these people, without these companies, without these organizations, it would not be possible at all. So hats off to all those. And again, we call these our lifesavers. Without these, without the support, without the help of the companies and organizations you can see behind me on screen, we would certainly not be able to keep the Shift conferences going forward. So they really are our lifesavers. So there we have it, remoteshiftconference.co. Join us there. And remember, if you join onto the Shift Conferences YouTube channel, the Shift Conference YouTube channel, you can actually see everything that we have here live as well. So everything unfolding throughout today and tomorrow on YouTube channel. Again, share that link within your communities, within your network, and everybody can actually jump in and share what's happening with us right here. Okay, time to invite our first guest, our first speaker, the first person, really, and a lot of you will know his name. A lot of you have heard about him, have seen him before. The man really responsible for making sure Shift carries on, sharing value to the IT and development community, the CEO of Shift itself, Mr. Ivan Burazin.
Thank you, Peter, and thank you everyone tuning in from abroad or here in the room with us. I know this year's event is a lot smaller than usual, but it is what had to be done to keep us all safe with the pandemic happening right now. This, as Peter said, it's been the hardest year for Shift, starting off with our Dublin event that had to be canceled because of the pandemic, then the one in the summer that we ended up doing as an open summer festival. And this year we wanted to do the Shift Money as a special sort of Christmas village hybrid conference, but unfortunately we could not do that. But nonetheless, I'm really, really happy that we were able to make this event hybrid in some form and keep the spirit of Shift, of entrepreneurship, of fintech alive in this city. So also very happy this year we're not alone. We have connected with Raiffeisen Bank Elevator Lab for their Startup Challenge, which will be on in a little bit. We'll see their finalists, the amazing startups from the region battling for the #1 place. And also we have connected with the Singapore FinTech Festival, enabling 60,000 people now to be connected and see what's going on in Zagreb in Croatia with the FinTech ecosystem. So once again, as Peter said, for those of you that are here, please make sure that there's not more than 25 people in the room with you. We really want to keep everyone safe. And also I want to thank everyone that made this happen, from the sponsors, the team, and everyone. It's been a grueling year. We're happy it's almost over, and we're super excited for Shift 2020 and the new 2021 coming up. Thank you all. Enjoy the show.
So there we have it. There's Ivan Borodin just sharing a little bit of a flavor of really what's to come as well. And again, I'm excited just as much as you are, really, to see how this day unfolds and tomorrow as well. Again, a lot of planning, a lot of energy, a lot of sleepless nights putting this all together. But again, at the end of the day, it's sharing the value to you, not just here in this room, but again, across the 60,000 fintech professionals across the world. So we move on to our first session of the day, first session of the morning. Are you ready for the conversational? Are you ready for the conversational revolution? Now, I can't answer that for you. Only you can answer that. So we're going to jump into the adoption of digital communication channels, which are really changing the way we're interacting with businesses today. And it's changing, actually, at a very dramatic pace. The next gentleman on stage right now is going to share with us a little bit about the processes, a little bit about the organizational setup, and again, hopefully answer that for you, being ready for the conversational revolution. Ladies and gentlemen, our first speaker of the day, the Director of Products from Infobip, Mr. Krešo Žmak.
Hi everybody, I'm Krešo Žmak, I'm Director of Products at Infobip, and I will start with the quote of 2020. Can you all see my screen? So, okay, I suppose you can all see my screen. I'm going to talk about the readiness for the conversational revolution, which is ongoing. So let me start with an F word, a word that some people are scared of, that is not very common to use in the business communication, that people find it very not that nice to be used in the business communication. And the word is disruption. Disruption has been used a lot as the bad word in the business. People are scared of it, not quite sure what it means, and so on. But it's very important for you to understand that later on during the presentation, you will see why disruption is very, very important for you to understand it and to start adopting it in the everyday business. The disruption should be applied within, from the startup within the garage up to the government. On each of the levels, the disruption is ongoing and should be adopted. So basically, the maxima should be disrupt or be disrupted. And that's, you'll see very, very soon how, and you are all familiar how some of the markets have been disrupted, and we'll focus more on the banking and finance as Shift Money is about that. You will see how that's influencing the banking and finance industry. Okay, continuing with F words, let's mention another one, which is also quite, that's like more popular, more people are more easy with it, and that's the UX. Or short for user experience. Everybody knows about user experience, the KPIs, the master plans, the strategies, the company visions are all around improving user experience. But that's in a lot of cases only a statement on paper or a KPI in some tool. Nobody's actually measuring it, or when you see and when you interact with the businesses, you don't feel their willingness that they are working actually on improving UX. And basically, if you combine the two words, the UX and disruption, the companies which get it right, which are proving to have the best user experience, are the ones which are disrupting. Because the user experience implies a lot of experimentation, being fast and so on. And that's what is disruption all about. Being fast, rolling out things very fast, validating with the users and collecting their feedback and getting back. So now to talk more about words and on grammar, I'm gonna talk about an industry which has been significantly disrupted. The telcos, and you can see these are some news titles from web, from newspapers, from technical newspapers and so on. So the telcos are being treated as dump pipes. So let's say the easier way is people are talking about pipes, but lately people start talking about dump pipes about telecoms. And that's okay, that's somebody's opinion, somebody thinks around that and so on. That's okay, somebody may think. But again, going back to the financials, there are two graphs showing that it's not just somebody's idea, somebody's thought, but this is the reality. So on the left-hand side, you can see the stock price of two of the major global telecom operator groups. And you can see they are in red. Actually, Google gave me these graphs, and they are going down. The price of the stock price is going down. On the right-hand side, you can see the change in price of the OTT app, where an OTT app is over-the-top app, which is actually consuming the dump pipe provided by the telecoms. And you can think of this as Netflix, as Airbnbs, as Facebook. So on the right-hand side, you can see they are growing, their stock price is going. And then on the left-hand side, you can see, and that's the stock price is reflecting the P&L is inside the financial results, the innovation, and so on and so on. So everything is shown with these two graphs. So there is a huge decline and there is a growth, and we don't see any change in these patterns. Okay, why is this happening? And I will give you a very plastic example, and that was the reason why I'm starting with telecoms. On Saturday, I wanted to buy a new internet package for my house because I'm on 4G, spending a lot of money on 4G. I don't have fiber at home, so my neighbor has fiber, and I said, okay, I'm gonna take fiber. I browsed the websites to understand the packages. It makes no sense because it's, a lot of this stuff. I want just internet. I will take my Netflix and so on and so on. So again, I'm thinking in a way of consuming just a pipe. I'm not thinking about services. I don't want to buy electricity. So there were popping up electricity commercials where I was looking for internet and so on and so on. And that's first bad user experience, that they didn't get me what I want. Second, I tried live chat because it was you can see here, it was 5 p.m. I think the kids were napping near to me, so I wanted to live chat. No response, nobody responded to me on the live chat. Then I called the contact center, and that's where the fun started. So I spent, you can see here, this is the actual screenshot from Saturday. I spent 3 minutes and 41 seconds browsing through the nightmare of the IVR. It was press 1. So press 1, sorry, press 1, press 2, press 5. So I was shifted through 5 different branches. During this, I heard 4 different voices, actually. So there was 4 different people recorded. It was not just one people. So you had the experience like you were talking with multiple people on the IVR. And finally, when this nightmare finished of the IVR, I got the response that everybody is waiting for. Please wait, due to heavy load, all of our agents are busy at the moment. Can you please wait for 9 minutes? And then, of course, what did I hang up? Because life is too short to listen to IVR music for 12 minutes. And that's a big fail, and this is why our telecoms being disrupted. Because if I cannot buy internet package under 3 minutes, then it's not worth all the money spent on the IVRs, on the call contact centers, on educating agents, and so on and so on. So this is an example. Shortly, you will see, and please try to identify all the patterns similar to the telecoms, and then compare them with how telecoms have the stock price. So I will give you an example from the banking and finance sector. It's also a real life example. So I wanted to open a new bank account to have to disperse my financials, to have 2 different bank accounts. I tried to browse the website and understand the position. Again, it made no sense. I was offered a business account. I was offered a student loan. I was offered to a lot of things which really didn't make any sense. Then I tried to go over live chat to speed things up because I really got lost into. I took two different banks here, also in Croatia. I got lost, so I really didn't know how to proceed to open the bank account. Then finally, I found the online form, and then I filled it. I got 25 mandatory fields. As I started filling it, of course, I made mistakes. There were some exceptions, you know, all the nice things that you happen when you are filling an online form. And then I clicked submit, and I received the email. I received a notification, you will be contacted shortly. And then I waited 3 days for the email, and I gave up because life is too short for waiting email confirmation for 2 years. And this is actually, you know how you are frustrated when this happens. This is how I felt, basically, because still, I think it was almost 2 or 3 years that I'm waiting for the email confirmation, which doesn't make any sense. Again, and you can see here, the UX is awful. My first impression of this bank, new bank I'm trying to work is awful. And I don't want to make any business with this bank anymore. Okay, but then on the UX part, there are success stories, and you are all familiar. Disclaimer, I don't have anything to do with the company I'm going to show you, but I, as the end user, I'm very proud how it works. This is Revolut, actually. So basically, this experience is exactly what I'm experiencing, what a lot of my friends are experiencing. So I was able to open an account under 30 minutes. There is clear guidelines how you should open the account. Even more, when you go there, you are clicking through the like user guide, which is helping you to do it under 30 minutes. So the toughest part is sending a social number or an ID card, but that also has been done in an exquisite way because there is the online form and so on and so on. And what is more important than this experience, that how I feel that Revolut understands technology, that Revolut understands security, which is very important, and I trust them. And I know that's the key in banking and finance, having somebody to trust you. So the security is hugely important in this space. And I trust them that they know what are they doing. And today, I'm starting to use my bank as the dump pipe just to receive the paycheck, transfer the money to Revolut and to other services, and then play there with, because I cannot find anything useful you know, they are not approaching me in the way I would like to be approached. And that's over the top in banking and finance. Okay, which brings us to what is the expectation and the reality. So the enterprises, they think that I would like to be face to face. They think that email is a very good way of communication, real mail, because still I'm receiving a lot of information from the bank through email, which I don't see for 3 months because I don't check it that often. Voice, email, SMS, social, so on and so on. However, the reality is completely different. The customers are digital first. They are on the OTTs, and you can see it from all ages. So my kids, they are digitally first. They don't know what is a fixed phone. They don't know what is mail. They consume mobile and so on. Us, the millennials, of course, we consume digital a lot. Even my parents have started, are now communicating with me over WhatsApp or Viber. So they are not calling anymore from time to time. My babysitter of my kids, which is 85 years old, she's the only one which is calling. So that's the only person that I know that is calling us. So everybody else is either on OTT, either on social, sending emails, or their push notifications is for in-app. And then when I'm talking with the brand, I'm expecting the same thing, that I don't need to go to a branch, that I don't need to send an email, you know, they send me email, please fill your contact information related to some security. Then I needed to fill in the mail and ship it. So it doesn't make any sense. You could do it in 3 seconds over a digital channel. So talking about theory of user experience, the reality is, and this is statistical numbers, you can find it anywhere on the net. I just extracted a few of them. So one thing is that the people are not downloading any more apps. So they are using the apps they have. Those apps are mostly the chat apps. like WhatsApp, like Facebook Messenger, like Viber, depending on the region. In Asian Pacific region, in Asia, the dominant are WeChat, Line, Kakao Talk, and you are familiar with that. Who is not, so people from Asia are very familiar. How much does what is the coverage of Line and Kakao? It's more than 95%, and the similar things are happening across the world where WhatsApp and Facebook Messenger and lately Apple Business Chat are coming on the field. As well, if you see the growth in apps downloads, so the growing countries like China, India, Brazil, Indonesia, so the BRIC countries are growing with these app downloads. But United States, which is, let's say, it's stable with this, indicating that the people are using heavily few applications. And this is quite important because it will be shown later on why these OTT chat apps are very important for how we are interacting with the brands today. That's hugely important for you to understand how the brands should start communicating with their end users. Okay, the practice. During this presentation, I think it was 15 minutes. Some guy was talking about disruption, blah blah blah, telecoms, blah blah blah, OTT UX. What you have been doing, you received most probably few emails. You answered few WhatsApp. I received actually 4 or 5 WhatsApp messages already. I didn't check Instagram, but I think some of you did check Instagram, did check their Facebook feed, or look something and LinkedIn. So you can see, theory says people are today dominantly using these applications. And in practice, I think the majority of you can identify, because this is what I am, and when I'm not presenting, I'm checking emails, Facebook, LinkedIn, or I'm receiving, and that's the reality. For the Gen Z among us, the TikTokers, potentially somebody even danced a little bit TikTok dance, but I'm pretty sure that somebody did. I think my daughter, which is down below, she did some TikTok dance as while we are speaking. So this is important to understand what is the expectation of the user experience. So how today people are communicating. Unfortunately, with the COVID, this thing has been even pushed even stronger. So we cannot, talk live. We are not traveling and so on. So we are fully online. And the thing is, what we realized on the talking with our clients, with our partners, is that this is gonna stay even after COVID. So companies realized that having online workers is more efficient, is more cost efficient, and so on and so on. So that's this way that we are going digital, the digitalization, which is the third F word, is happening at this huge pace. And that's why you need to digitalize and to improve the user experience using the digital channels. Okay, which brings us to the OTT channels. I spoke a little bit, so there is Line, Kakao Talk, WeChat, which are dominant in Asia. You have now Apple Business Chat, which is USA, and then the rest of the world is mainly WhatsApp, with few exemptions using Viber. Google is also pushing there. So the future, what is the reality? So we are today talking with our family over these channels. We are talking with our friends. We are talking with our co-workers. Some of them might be also friends, some of them are not friends. So we are used to make a conversation with these guys, with these people. So what is natural that we start having conversation with brands, that we start using the channels with brands. And what is gonna come, we are gonna have conversations with things, because Internet of Things is enabling us that we can talk with our, I don't know, shoes, with our fridge, with our car, and so on and so on. So we are gonna have conversations because we are used to, because it's natural that I'm now on WhatsApp talking with my friends or coworkers or organizers of Shift, and then it would be natural for me that I start talking with some brand, that I start asking the telecom, hey, can I get more speed, or can I buy internet? It would be natural for me. Not that I now leave the app and go somewhere else. And this is the future. So when we are talking about conversation, we are talking about conversational everything. So, and again, this is the trend, this is the reality. So there is the conversational commerce. You've seen this buzzword and you're already consuming it heavily because you're interacting. When you're buying something over the net, you are having conversations very often with the supplier of the stuff and so on and so on. Conversational support. You buy something, then they ship you the wrong thing. You're trying to communicate with them. Conversational marketing, same thing. Conversational engagement, which is the, let's say, bigger brother of the conversational marketing, and actually conversational everything. So we are meant to make a conversation, to have a conversation. We are used to have a conversation over the chat apps, and we are gonna do it. So what the future and where everybody of the chat apps that I showed you earlier are going, and if we see at the numbers, there are no apps anymore downloaded. So we are gonna spend more and more time within the chat app, like WhatsApp, like Viber, like Facebook Messenger, Apple Business Chat. And we start doing a lot of things. We'll start paying bills there. We'll start purchasing stuff. We'll start supporting. We'll receive our kids' school reports. We are already receiving it there. We'll start to get payments through those applications. And actually, so that's the future, which is already live in a country for a long time, and that's WeChat. So WeChat, and you're very, so people on the call from Asia, from China especially, they're very familiar how WeChat is working. So everything is in WeChat. You have WePay, you pay with it, you pay in the restaurants, you pay you pay for food, you pay for goods, and so on and so on. In the airports, you have the signs MasterCard, and then you have Alipay and WePay. So it has become an alternative payment method, because that's very important. But the primary goal of this was, it was a chat application for chatting, for conversations. And that's why, and everybody wants to be WeChat. So WhatsApp wants to be WeChat, Facebook wants to be WeChat, Instagram, everybody wants to get there. So the future is there in the sentences that I'm showing you here. So conversations, and everybody's going to follow WeChat. So even you as a company, as a brand, you can see how the companies in China are today interacting with their end users using WeChat, and get some really good ideas, because we are looking at the situation there in Asian Pacific, how people are interacting with brands over the chat apps. And we see there, we get a lot of great ideas there, how the way of communication, how the way we are doing business is gonna evolve. Okay, the future, that was supposed to be the future, the title of this slide. However, it's happening now. So even in the banking space, you have the chatbots, you have a lot of artificial intelligence, you have machine learning, you have virtual assistants, you have virtual tellers, there are augmented reality and virtual reality solutions, and it's getting pace in an incredible, in an exponential momentum. Later, I will show you 2 success stories just to show you why everybody is adopting this so fast, because there are results behind this. So it's not a buzzword. It's not something that, you know, some tech geek said, okay, artificial intelligence is nice, we should have it. No, artificial intelligence, machine learning enables the company to cut their cost 10 times, not 10%, 10 times. So that's not percentual growth, it's exponential growth. And that's super interesting. And when people see that working, they start adopting more and more and more. And basically, that's the future. I wouldn't go into details. You're I think, also very familiar with all of this. These are just some of the examples, what you can do via chat app. We are having, because here you are, again, you can see you are having a conversation. It's automated conversation, is fully cognitive conversation. It really depends. It depends on the culture of the company, how you want to profile your people, about the tone of voice. So there are a lot of things that you need to take into account when you are building a chatbot or a virtual assistant. You can have a combination of a live agent having augmented reality that he can show you through his hand can be on the screen showing, or the mouse showing you what you should click, and so on and so on. So there is a lot of things that can be done. What is very important, it's not the technology only, but it's the way how you're gonna tell the story. So because going to digital implies there will be a lot of automatization, robotics, and so on. You need to tell the right story. You need to tailor the experience in the best way, because if you don't do it, you will have the same thing that I shown on the first few slides, where it was an awful experience. So it's very important not to just adopt the technology, but you need to have the conversational experience teams. You need to have, those are people, those are psychologists, those are engineers, and so on, which will help you build the experience of how you are going digital. Okay, which leads us to one of the just food for thought about the endangered species. You are familiar with the pandas, you're familiar with the black rhinos, and the last one is the bank tellers. So there is an expectation that this is an endangered species, because personally I haven't seen it for last 3 or 4 years, and I think a lot of my friends and family also didn't see them. Maybe my babysitter, she saw them because she's used to go to still to banks. So this is just a little bit provocative slide, but what is important to understand that the companies must adapt. So opening new branches and so on won't long-term be a resolution. So companies need to go digital. Okay, 2 success stories from the banking and finance to show you why it is very important to adopt digital channels. So one is the VTB Bank. They switched to Viber, and they immediately got 80% less complaints because they were faster in resolving them over Viber, because it was a chat app. They were able to send more rich personalization. They send a happy birthday campaign, and then as a result, they did a follow-up on that, and they were able to close 40% to the Visa Gold card related to that. They started with a poor UX, with a lot of people complaining and so on, and they were, you see, this is 80%. It's huge gain. That's why it is super important to have. And they started with Viber, with conversations, with a chatbot, and so on, and they are now growing. So the way to go is to start slow, to start with a single campaign, with one use case, and then gradually grow. That's the idea that should be adopted. This is again, this is a public use case. That's why I'm showing it here. And the other one is from Raiffeisen Bank. In I think it was Russia. They had a huge call center cost and very slow time to resolution. And I showed you on the first slide how the telecom contact center works. I think the same thing is the banking contact center. So huge waiting times, not so many agents, and the user experience is awful. And on the other side, you have an awful user experience, and on the other side, you have a huge cost because a lot of agents doing talking and so on and so on. So they added WhatsApp as the channel again to their contact center. They were able to cut the cost 10 times, and they are able to have 20% better NPS. So to have 19% better NPS, you usually need to invest around few million euros in the marketing campaigns to grow it like 1.5%. With this, they were able to get it in 20%, almost 19%. So you can see it is exponential cost cutting. It's a huge improvement. If you compare it, it's exponential growth of the Net Promoter Score, which is showing the satisfaction of the end user, and that's important. And you can see here, they adopted a new channel, so they were disrupting in a way, and they improved the user experience. And those are the two main things that I mentioned at the start. And this is actually the last slide. So the takeaways are: think a lot about user experience. So user experience is happening all the time, not only when you are coming to the bank, where you are visiting the website and so on. That's the UX is hugely important. And you have multiple channels. Don't forget about those. And on the digital channels, you're getting more and more clients using those. And second one, disrupt or be disrupted. So be fast, try, experiment. Okay, financial institutions are quite conservative and they want to go slow, but you have options with digital brands, with brands for youngsters, and so on and so on. So that's it from my side. Feel free to contact me over LinkedIn or email, and have a great day and have a great conference. Bye.
Thank you so much, Knesha from Infobit. There we are, first session, really kicking off our first session of the day, really giving us a flavor of really what's to come as well. So we move on now to our second speaker of the day. So, regulators in a modern age. Regulators really often caught between a crossfire between those who provide services and those who receive them. So online payments, mobile banking, P2B lending, securities, cryptocurrencies, all at everyone's fingertips. But the thing is, remember, open banking and data are just the tip of the iceberg of possibilities. The next gentleman on stage is going to share with you his vision on really how regulators can really adapt to fintech while holding their ground. Ladies and gentlemen, please welcome to the stage the governor of the Croatian National Bank, Mr. Boris Vujčić.
Thank you very much. It's a pleasure to be here in these weird times. I've been told that this room, this space here looks very different in normal times with much more people around. Unfortunately, we have to operate this year in these circumstances of the pandemics. But nonetheless, I think that the program at least what I saw, the program looks very good and that you will enjoy the conference. It's my pleasure also to be invited here and to talk today about the regulation of the financial industry in the context of the fintech. From what we see here, it's all about modern things today or things that wait for us in the future. And I come from this building. This is where I work, where I spend most of my days. And that one doesn't look very modern, as you can see. It's basically patterned on a design of a Greek temple, which is the role model for these Ionian columns, and that backs to the ancient times. So you probably wonder what this relics of the past has to do with the conference about the financial innovations, future of money, future of the fintech. But from our standpoint, it does. In what sense? Because once you strip the technology and other fancy user features, what is left underneath also matters. And what matters in mind of the central bankers, people like myself, is stability. Money is all about the stability. Our main institutional goal as the regulators of the financial system is stability of your money. This is what these columns that you can see symbolize, and they are not just standing there to impress the visitors or the photographers, but to remind us that work in that building of our duties of keeping the stability. Let's now move to the fintech developments, and later we'll put them in the context of stability. Today, one of the key challenges for banks as traditional financial institutions is the need to respond to increased digitalization and the growing competition of the fintech providers. Digitalization is at the same time a threat and opportunity. It represents a threat because it challenges the way banking has been conducted for centuries, but it can also be considered as an opportunity in the sense that the modern technology enables banks to be more cost efficient as more and more services are being provided online or via mobile phones rather than through bank branches. Yet the emergence of fintech companies still has not seriously undermined the position of the banks. Not that long ago, at the beginning of the century, I remember visiting conferences where many people were predicting that telecoms will take over banking industry because they have larger balance sheets, they have better ways of communicating with the customers, and people were predicting that they will just buy out the banks and take over the business from the banks. Today, it's clear that this has not happened. It's also clear that some other predictions, like that the large IT companies will take over banking business, have not materialized. People were also predicting that companies like Microsoft might take over the banking using their unique channels of approaching the customers and taking over the banking business. But today we see that has not happened either. And maybe it's better that they didn't do it, because they're now in the business where the return on equity is much higher than the return on equity in the banking business. What banks have learned in the meantime is that they need to be very responsive to the new trends if they want to preserve their dominance in the financial services business. They understand they have not been challenged in terms of their business being taken over by the fintechs, telecoms in the old times, large IT giants or fintechs today, but they understand that part of their businesses have been dented and that they have to adjust to the new competitive environment. What we see is that for the time being, fintech firms have not challenged banks in two major areas: deposit taking and lending. There are fintech innovations in both areas, but not a serious threat to what the banks are doing. But they did it in a third area, and this is the payments. Payment system challengers are offering new and less costly ways to execute non-cash transactions. On top of that, they have even offered a new architecture, new payment systems with their own money, hovering somewhere in the cloud, out of the control of regulators, central banks. An additional major challenge which emerged last year in 2019 was Facebook's announcement of its plans to enter the global financial system by providing a digital currency called Libra. Libra was supposed to allow billions of users to make financial transactions across the globe. That was a serious wake-up call from the regulatory standpoint. Before that, I wouldn't say that the regulators would that much attend to what's going on in the field of the cryptocurrencies. If it had materialized, namely, the emergence of such global payment initiative would have been an event which would challenge the traditional financial architecture which we have today, affecting both the commercial bank's business as well as the role of the supervisors in regulating the financial markets. In a way, there were just too many risks involved in that. Having a supranational, privately owned, quasi-central bank, in a way. So the regulator's response, as you have seen, was swift. Now, having said that, let me now turn to the money, and then I'll come back to the stable coins later, because this conference is about the money shifters. Let me try to briefly explain how we define money, which functions money serves, and how we gauge whether the money is sound. Money, as you know, is at the heart of all economic transactions. It flows between households, businesses, and other stakeholders. It is the vital component in the transfer of goods and services, and therefore it's crucial for supporting day-to-day economic activity. But not only that. The importance of money is in its ability to stretch purchasing power over time and to allow for spending decisions to be postponed. If not spent immediately, money also helps to facilitate investment and contribute to economic growth. There is already a universally accepted view that money is a public good. This is useful to recall whenever one embarks on a journey of constructing a new, more modern or fancier form of money. Because whenever one wishes to innovate in the field of finance, there is also a possibility of things going wrong and leaving, therefore, serious consequences with broader impact than on a single company or a few companies, broader social impact. Money has historically served three functions. It is a unit of account, a store of value, and a medium of exchange. To fulfill its unit of account function, money is defined by law as the only currency accepted within a given jurisdiction. It is the legal tender on a certain territory. It supplies under the control of the central bank, and the transactions are denominated in that currency. Other two functions, store of value and medium of exchange, are provided to households and businesses via banks in the current architecture of a banking intermediated monetary system. In the past, we had different experiences, but they have not served the society equally well as the current architecture. What makes money sound? There, the answer is quite straightforward. Money is sound if it performs these three functions properly. But money has transformed over time. It is transformed from cattle and shells thousands of years ago to today's modern paper and digital money. There is a very well-documented case, for example, how cigarettes served as money among prisoners in World War II and again later in the US prisons. After the US government banned cigarettes, these were replaced with postal stamps. Just recently, I have read a study, and there is even a book on this, how ramen noodles are now used as favorite form of money among the inmates in prisons. I'm not quite convinced that ramen noodles' value stays the same over time, but neither was true with the cigarettes. However, in a high-frequency trading environment like prisons are, there is probably enough merit in noodles to serve as money. These are, of course, only anecdotal cases to prove the point. Money today is technologically advanced. It's stored as a digital entry. It's an electronic record, a global footprint of a modern age. The total value of digital money, such as bank deposits, today is many times larger than the value of its physical counterpart, or cash. And to further clarify where we are, let me say a few words about the monetary architecture. The monetary architecture stayed same now for a very long time. It looks as follows. Central banks issue cash and reserves, while banks issue deposit money. Central banks control money supply. We do that via banks, which are, in return for performing risk and maturity transformation, allowed to hold accounts with the central banks. And it is through these reserve accounts in the central bank that the monetary policy is pursued. And all transactions are eventually settled through these reserve accounts. It's a closed-loop system under direct control, management, and supervision of central banks. In a way, this is also quite different than, let's say, less than a century ago, when most of the money was in a physical form, both cash and paper records of reserves. While today, it's mostly computers doing the job of keeping the data records. So with by far the largest chunk of central bank money today being already digital, It's very sophisticated and automated computers that maintain the system. The system, which is fast, scalable, secure, and equipped with the latest technology. However, we are closely monitoring what is happening in the world of money digitalization pursued by the private sector. With all the fintech challengers around, it's important to continuously check whether there was a real shift in the architecture of money, or is there merely a continuation of a technological trend, another novelty? So let us look now briefly again into some of the important private initiatives in this area. First, of course, we'll start with the cryptocurrencies. These were, I would say, the first serious challengers to the monetary architecture I have just briefly described. Cryptocurrencies, such as its most prominent representative, Bitcoin, offered a new architecture. This architecture is alluring, so it even created a movement based on its technology, a blockchain movement. What is unique is that the cryptocurrency architecture has introduced its own unit of account and medium of exchange. It's based on technological novelties of proof of work, decentralization, and blockchain. Nevertheless, 10 or more years later, we are still waiting to see if it fulfills its promise to become a new money. From both payment and financial perspective, I do not see how it could qualify as money. Its value fluctuates erratically, it lacks scalability, it is energy inefficient and relatively slow compared to the payment systems that we have today. Therefore, I do not see how it could efficiently fulfill any of the functions mentioned earlier, and to be very blunt, it's far from money as it could be. In a world of complex banking regulation aimed at protecting people's money, and where stability is of the essence, as I said, we see it merely as a speculative investment. Apart from that, cryptocurrencies also built a dubious reputation as money laundering havens. Still, again, cryptocurrencies remain an innovative concept. Let me turn now to another area, another change that is relevant to us. Well, actually, it's something that regulators, in a way, enabled, in a way that we framed the field in which new digital payment initiatives could develop. You see here it says PSD2, and I'm referring here to the new challengers, both in terms of new forms of money, like electronic money, and new players, e-money institutions, PISPs and AISPs. It was first in 2009 when the e-money directive was enacted, and then in 2018 when the updated version of another relevant directive took effect. The latter is well known under the PSD2 abbreviation. What we have tried to achieve with these two pieces of legislation is to accommodate both demand and supply side of the payment systems and payment services ecosystem, and to level the playing field for both incumbents and for the challengers. However, this architecture also did not fully live up to the expectations. Its current state of progress is the consequence of a historically low interest rates financial environment, time needed to build stronger network effects, deeply penetrated credit card schemes, still non-existent EU interoperable clearing regimes, and new players not being allowed to directly connect to clearing and settlement payment layers. Even though it failed to some extent, some of its policy enablers, e.g. open banking, surfaced. Open banking is the major source of innovations for challengers but is at the same time a great tool in promoting competition between incumbents. In Croatia, all banks have implemented open banking standards via application programming interfaces. The challengers, fintechs, payment service providers are now able to make use of bank data on behalf of customers in many innovative and helpful ways. Let me now turn to what I have already mentioned, stablecoins. This is the third major challenger to the current monetary architecture. Stablecoins have emerged in an attempt to overcome the volatility of first-generation cryptocurrencies. Stablecoins have further developed the cryptocurrencies architecture, primarily in an attempt to correct previous major flow, which I already mentioned, as they promise to minimize fluctuation in its value against a reference currency such as the dollar or the euro, or a basket of currencies consisting of several major global currencies, as Libra was promising to do. So in a way, it's a hybrid architecture, having characteristics of both cryptocurrencies and e-money at the same time. However, as I have already mentioned, it was only after the announcement of Libra that the Global Stablecoins Initiative got the full attention of the central bankers and the regulators overall. If Libra were to be launched, 1/3 of the global population could become its users very quickly by making only few clicks on their mobile phones. Even though today, after the swift response by the regulators, Libra project seems to have been abandoned, under that name, recently it has been rebranded into Diem. So the idea is very much still alive. Global stablecoins offer alternative payment arrangements and challenge both to national monetary systems and the current cross-border banking remittances market, worth approximately $700 billion yearly. Idea of global stablecoins offers an idea of operating in one jurisdiction, denominating in another currencies, and being used by customers in a third jurisdiction. This raises questions about the impact on monetary policy and financial stability, on the banking system, on money laundering controls, on consumer protection, etc. Global stablecoins ascent could mark the point at which private companies outside the scope of the regulated financial system become major players in the international financial architecture, diminishing the role of central banks and current long-time developed regulation of the financial system. So the stakes are really high here. And in my opinion, and the opinion of other governors and financial market regulators, stability could be at stake. Therefore, as old saying goes, when the road is slippery, you take small steps. Which brings me to another topic, which is the newest one, I would say, but has drew a lot of attention lately. That's the central bank digital currency. This is the central bank's own challenge to the existing architecture, and a recent survey found that 80% of central banks are engaged in investigating central bank digital currency, and half have progressed past conceptual research into experimenting and running pilots. But what is the central bank digital currency, and what are the reasons for such a move by central banks? The CBD is the central bank's liability offered in the digital form for use by citizens and businesses for their retail payments. In essence, it's a central bank's digital equivalent to cash. If it materializes, CBDC will represent a true shift in the monetary and payments architecture. The main triggers for central banks' widespread interest in CBDC are both national and international. On the national level, central banks are responsible for the safe and efficient functioning of the payment system. So far, cash has served the purpose of a backup option in case the digital payment infrastructure fails. But with the declining use of cash, or even in the case of its near total abandonment in some countries, it is up to the central bank to provide alternative solution, since money is, as we previously said, a public good. The other trigger is international. Current cross-border transfers, as many fintechs themselves have properly understood, are costly and cumbersome. Besides, many central banks want to offer scalable, fast, secure, and even globally reachable digital currency. Countries first to implement such a solution would have the first mover advantage and could create a strong network effects, or could even at least partially challenge the dominance of the well-established reserve currencies. 2 months ago, the European Central Bank published the report on a digital euro. This document paves the way for the potential euro-based CBDC issuance. What is important to note here is that this new form of money is meant to complement the existing two, reserves and the cash, to exist alongside them and not to replace them. But creation of such a CBDC is much easier said than done. There are many open questions left with the particular design of the central bank digital currencies. Whether the CBDC is tiered or not, whether it's remunerated or not, whether it's account-based or it's token-based, whether it's anonymous or not. If anonymous, would it be full anonymity or only to some degree? What about the cross-border use of the central bank digital currencies? These are all open questions at the moment that are discussed in the central banking circles. But we still don't have answers. And answers to these and other questions are crucial for the design of the CBDC and its implementation. The implications CBDC could have both on monetary and financial stability and the role of central bank are particularly important. To what extent CBDC could disintermediate the banking sector, and what could be the impact on banks' funding costs? How to mitigate the risk of a bank run once we have a CBDC? Which services and infrastructure along several steps of payments value chain should be central bank, and what might be left to the private sector? Whatever option is chosen, safe, innovative, and integrated payments is the ultimate goal. It's also the Croatian National Bank goal on our path to the euro introduction. Having said that, let me just remind you that our national payment infrastructure is fully compatible with that of the euro system, and that just recently we have introduced an instant payment system in Croatia. It enables transferring money instantly, either through existing channels or through mobile applications, just by knowing the recipient's phone number. Croatia's instant scheme is based on SEPA credit transfer instant payment scheme and stands ready to pan-European interoperability once we adopt the euro. Which brings me to the last part of my speech, and this is the outlook for the fintechs. So just a few thoughts before I finish. Where do we stand today? The world has obviously changed a lot. Mobile phones are ubiquitous. Instant messaging and social networks are a key part of many people's lives. Digital connectivity has changed not only our leisure time, but also the way we do finance. Sending money is as easy as sending a message today. In essence, this is what money transfers really are. at least from consumer perspective, sending nice and user-friendly messages. Nevertheless, while digital challengers are trying to increase efficiency in delivering financial services, widen their range, increase competition, and promote financial inclusion, they are bringing challenges as well, posing new or old risks in the new models to consumers, investors, and more broadly to financial stability and integrity. When designing an adequate policy framework, regulators need to find a balance that maximizes benefits of innovation while at the same time minimizing potential risks to the financial system. To achieve this, it is always useful to stick to the golden rule of supervision. Same business, same risks, same rules. This is what we do when confronted with various tech buzzwords and the vivid clothes of technological progress. We try to discern between the relevant and irrelevant. We try to strike the right balance between many options, to find an approach which is risk-based and proportionate. And what is very important for us, the one that, again, provides stability. And now just one more thing to conclude with. Let me use this opportunity to invite all of you interested to contact the Croatian National Bank's FinTech Innovation Hub and share with us your innovative ideas in the area of banking and payments. Many of you have already done that. Money Shift conference participants, or money shifters if you want, we're inviting you to throw any ideas you might have at us, and together we will check how those ideas fit to the current architecture and how fit we are together for the digital age. We can count on you, I hope, as much as you can count on us, on our assistance. Our goal is to assist you in developing the products in the phase of innovation so you don't spend time to develop something that, in our view, will not be consistent with the financial architecture and the stability concept that I already mentioned. So having said that, if I can picture a central bank of digital age, my office, then it could maybe look something like this. But it will still represent stability, which means that digital Ionian columns will be as solid as the ones that you can see today, ones that have represented stability since the ancient times. So thank you very much, and I wish you a very successful conference.
So, ladies and gentlemen, welcome back. Again, if you've just joined us, remember this is Shift Money 2020 in partnership with the Singapore FinTech Festival, all about debate, insight, financial ideas, financial insights and advice. And by the end of these 2 days, again, walking away with lots of value and insights regarding the fintech landscape, not just here in Croatia, but again, around the world as well. So, ladies and gentlemen, we are now ready for the Regional Elevator Lab Challenge Finals. So Bosnia and Herzegovina, Croatia, Serbia, Montenegro, and Slovenia, all part of Elevator Lab, an international partnership program powered by Raiffeisen Bank International. So it's all about finding the best B2B fintech startups within the region and then finding them, showcasing them, but also nurturing them so that they can scale up and that real stepping stone to international success. So already we have had 3 different local competitions in Bosnia and Herzegovina and Montenegro, Serbia and Croatia. The 3 winners of those local competitions each won themselves €5,000 in cash, and they also had an opportunity to pilot their project with a local bank. Also the possibility to have more conversations and present their solutions to at board meetings of the local Raiffeisen banks as well. And more importantly, they are here today to compete against each other, a local battle, as it were, competing against each other to walk away the winner of the Elevator Lab Challenge Finals. So, what's at stake? We know what they've won, but after being a winner today, what will they actually walk away with? The winner will walk away once again with another €5,000 in cash as a cash prize. Also, a chance to have more conversations, more meetings with the senior managers from Raiffeisen Bank and Raiffeisen Bank International. An opportunity to integrate their innovation, to actually implement their idea, their big idea, into Raiffeisen Group's banking systems, which actually reaches more than 1.7 million clients and naturally intensive media coverage as well. They get training to present their ideas to business clients as well, and also a chance to pitch their idea at the International Elevator Lab Demo Day in 2021 in front of distinguished representatives and the entire Raiffeisen Bank International Group. So as you can hear, a lot to play for, a lot at stake. And again, I'm intrigued as much as you are, really to hear these pitches, hear these big ideas, and really find out who's going to walk away a winner a little bit later on. At this stage right now, I'd like to introduce the jury members, the people that will decide the fates of the lucky winner here on the stage today. But first of all, one of those jury members I'd like to invite here to the stage in person, and that is the Director of Digital Products from Raiffeisen Bank Croatia, Mr. Marko Ladica.
Hello, Peter. Hi, thank you for your welcome, and thanks everyone for having us here this year. You have done a tremendous job of announcing the Elevator Lab and what is it about. I should just briefly add that we are going strong from 2017, and also we have more than 10 startups with a long-lasting cooperation between the Raiffeisen Bank and themselves. And of course, the last year's competitor has also given an opportunity to pilot the project in the Raiffeisen Bank, and the cooperation is still going strong. So there is a lot at stake on today's competition.
Fantastic. Right, what we'll do now, let's meet the other jury members who are not with us here in person, but they are beaming through the screen right now. So let's invite the jury members to join us right now. So CEO of Inicijativa Digitalna Serbia, Nebojša Đurđević. Are you there? Nebojša.
Yes, hello everyone.
Let's
Pleasure
I
to
him coming.
Yeah, just waiting.
Hi, welcome.
Hi, Rebusha.
Fantastic. We also have Maya Miljevac, Head of Startup Enablement at Maestro Solutions. Hi, Miljevac, welcome. Okay, we can't hear you, but we can see you. Fantastic. We also have Head of Digital Banking Center at Raiffeisen Bank Bosnia and Herzegovina, Kenan Karcic.
Hello, regards from Sarajevo.
We can hear
How
you.
are you?
We can hear you loud and clear. Absolutely. We now have also Deputy Chairman of the Managing Board at Raiffeisen Bank Serbia, Petar Jovanovic. Hi, Petar.
Hi, guys.
Welcome.
How are you?
Fantastic. And also Senior Strategic Partnerships and Ecosystems Manager at Raiffeisen Bank, Istvan Kovac.
Good morning, Zagreb. Good evening, Singapore.
Hello.
Nice to be here. Hope you can hear me.
Fantastic. And good night to Tokyo. Right, we now have all our jury members ready and waiting. I'm sure, again, you're intrigued to really hear what these three pictures really have to offer. Just to give you the drill of how this is going to unfold, it's very simple and not complicated at all. Each startup will have 5 minutes. They share their big idea for 5 minutes. No more, maybe less, but it's 5 minutes sharing their big idea. After that 5 minutes, we then dig a little bit deeper. The jury members will then ask questions and dig a little bit deeper under the bonnet to really find out what's making this startup tick. And that will go on for about 10 minutes, okay? So up to 10 minutes for question and answer, and 5 minutes to actually share their big idea. Okay, I think we're ready. What do you think? Are we ready?
We are ready,
Absolutely.
yeah.
People here, you're ready. And those of you that are beaming in from wherever you are around the world, I'm sure you're ready too. So without further ado, let's start with our first pitch of the Elevator Lab Challenge Finals. And that is Surgeon Stefan Kostic from Serbia with Ipification.
Hello, everybody. We are delighted to be here in the regional finals. I'm Stefan. I'm the CEO of Ipification, the company that revolutionized the way of how we authenticate our mobile devices. We are all familiar with SMS one-time codes problems. They interrupt the user experience, they don't arrive often, but most importantly, they are insecure and prone to SIM swap attacks and many other security loopholes because SMS was never intended to be used for this purpose. Good news is that we have already started commercializing the patented solution called Ipification and achieved great results this year, but way bigger expansion is expected in 2021. So what's the magic trick of multiplying our revenues 20 times in only 1 year? First of all, a very solid telecom network footprint that we've established in the last 3 years of hard work. There are 24 telecom operators live in 11 markets, enabling over 350 million subscribers with our technology. And that's just the beginning, because there's close to 50 more telecoms starting to go live in 2021. Secondly, we signed agreements with already entrenched market players that are ranging from a platform provider such as Microsoft, big A2P SMS aggregators, payment providers, fraud and identity companies that already established a big ecosystem of merchants who are using this type of verification and technologies. So they are using our technology as a backbone to satisfy their customers' mobile authentication needs. Third, and most importantly, our telecom-based mobile authentication solution is unique. It's a super strong possession factor verification, and it's the only market solution that is able to verify 3 most important network elements: phone number, SIM card number, and device number in a single click based on the user's IP address. All the other solutions that depends on SMS or header enrichment are unfortunately already crippled and deprecated, and as such they have a shelf life. You can see an example of a very popular platform in Serbia who integrated this solution recently, where the user just inputs the phone number and click verify. No need for SMS, no need for voice call. Everything is verified seamlessly in a single click based on the user's IP address. I would like to use this occasion also to show one banking use case we are developing with one international bank for additional verification for online transactions. As we all know, the banks have the phone number of the user in their database as a standard piece of information for digital or physical onboarding. And whenever the user is buying, I don't know, the airline tickets, paying anything on the e-commerce online with credit or debit cards, they have additional verification methods in place, which mostly resides around the hardware token verification or soft SIMs in the mobile banking application, but the most common one is SMS one-time PINs. So the bank is adding the QR code verification as a much more user-friendly option and much more secure. So the only thing the customer needs to do is just scanning the QR code as I'm doing here with their camera, and that's it. There's no need for an app, and transactions is seamlessly verified online. On the mobile app side, basically the verification is seamless with one click without any scanning of the QR code. Identification will become the norm in the field, which is important not only for us as a company, but for the entire digital ecosystem. As you can see here on the right side, our efforts have been recognized by some of the biggest global awards in the space. We have assembled a highly experienced international team that all share the same vision that next generation mobile authentication must be secure, it must be frictionless, and it must protect the end user data and privacy. So please join us to make this vision a reality and revolutionize the mobile authentication space together. So thanks a lot for your attention, and looking forward to the Q&A session coming up very soon. Thanks a lot. Cheers.
So there we have it. There we have it. Ipification, the first startup setting the tone of this competition. What happens now is we jump back to our jury members, and they have a chance now to ask questions as much as they like, digging a little bit deeper underneath that bonnet to find out really what makes Ipification tick. So let's jump back to our jury members. They're coming through. There you are. Fantastic. And Stefan, hi, at the bottom. Can you hear me? Raise your hand if you can hear me. Okay, we just need the sound here on stage.
Same problem as we are, but leveraging on the existing technologies that are already deprecated on the telecom side. So they use what I mentioned, header enrichment, which been there for more than 20 years or so. And unfortunately, it's becoming deprecated because this technology was meant to be used only on HTTP protocol, which is already, you know, a history for many websites and many security companies nowadays. So naturally, these companies are also becoming kind of our partners on the connectivity side, as I mentioned. So they're using basically the connections we establish on the telecom side, and basically resell this service to their clients. So in terms of you know, deploying the platform on the operator side, we are pretty much unique on the market at the moment.
Okay, thank you.
If I may ask, I guess it's related. First of all, Stefan, great presentation, really a good pitch, so thank you for that.
Thank you, Navish.
I read the briefing, so I understand what you're saying with respect to the competitive landscape, but how do you ensure that sustainable competitive advantage? Because this looks so slick, it solves the real problem, and I think there will be a bunch of people looking at copying. So you mentioned a patent. What's your sustainable competitive advantage strategy, and how do you protect it?
Well, as you said, I mean, we've done our share of work of patenting the platform, the GMID box side, where the magic happens on the operator side in 5 countries, including US and UK. But I mean, the very nature of the business is kind of making it hard for the other guys to jump in. We all know how hard it is working with telecom operators, right? Like the first deal we needed to make, it took us 1 year to get one telco. Luckily, it goes exponentially. You know, now when you start with the references, when you have 24 operators, then it's way much easier. You know, but if someone wants to start today and do the same thing as we are, they definitely need to go through all the hurdles and know-hows and learning curves as we did, and that's kind of not motivating for many players, and especially even including these A2P SMS providers and payment providers who are already in the telco space. They prefer having someone else do the painful job and put the backbone there if they can use it, for a small share of their revenues.
Okay, so if I may just ask, so that was the first part. So you are saying you are first in, you will get the relationships, you will get the scale and first mover advantage. So what's the patent? Is the patent issued? Is it granted? And what does it protect? How strong is that?
Yeah, it's granted. It's granted in 2 countries. It's already granted in the US and Hong Kong. In UK, in China is pending. So yeah, I mean, the patent is protecting exactly what I mentioned is our core. We are the only solution that is able to verify 3 network elements, what the telecoms are calling network triplet, SIM card, device, and phone number, based on the public IP address that's assigned by your telecom network provider.
Okay, thank you.
That's the core point of the patent. Yeah.
Got it. Thank you.
May I go next one?
Yeah.
Okay. The question is, I understood that you, excuse me, I understood that you have that you established a relationship with telco operators across the world. Do you have any references or use case already implemented within the banks, and maybe just mention?
Yeah, I mean, for us, telcos are just the strategic partners because they're necessary, players to have our solution working. On the banking side, as I mentioned before, I mean, we directly haven't signed the deals with the banks. We have a couple of fintechs and e-wallets in Asia, but our clients, I mean, as I said, channel partners, they are already using our technology for some of the biggest banks. I mean, the biggest bank in UK, in Spain, for example, BBVA, if you are familiar, they're leveraging on our telecom network connections, via our channel partners. So we are basically a backbone connectivity provider, but they have a direct agreement with the guys that I mentioned in the presentation. Yeah.
And just a question from my side, what do you see the best and the biggest use case with the banking industry?
Well, I mean, there are many use cases. I mean, the standard one is the remote phone number verification, which we are all familiar with. I mean, especially in Asia, but we can see the trend coming in Europe as well. There are these neobanks where there's no more brick and mortar kind of physical places for the customers to come in and to verify whatever the piece of identity they need. And the phone number, I think we all agree, is very crucial for any fintech, especially for the banks. So one case is during the user onboarding, then definitely during transaction confirmation as well. As I've shown, no matter it's a desktop or a web confirmation or a mobile app confirmation, we think that it's necessary to always be on the lookout and on a potential fraud alerts, because SIM swap attacks started to grow in Europe as well. I'm sure you are all familiar as well, and this is one of the solutions that is able to protect it without jeopardizing the user experience. That's a very important piece of the element, because you can check this API every time you want to check whenever something sensitive happens without asking the user anything.
And the prerequisite for this use case would not be an installation of some additional application, but as I understand, you're doing it purely on the protocol level and with the QR code.
Correct. There's no need for an app. There's no need for anything on the user side to do it. As the moment the telecom operator goes live with our technology, basically all their subscribers are enabled from the first day to use this verification.
Okay, we've got
one question. Yeah, sorry.
Thank you. Maybe it's a quick one related to that. You mentioned you're present in 11 markets with telco. Which markets would that be? And especially I'm interested, which of the CEE, Central Eastern European markets you would be present? Thank you.
Yeah, we started from Asia, right? Like we started from Hong Kong and the North APAC region. We deployed the solution in 3 countries in Southeast Asia. We have 2 countries in Middle East, Kuwait and Iraq. And now, during COVID time, we intensify our presence in Europe, because a lot of our team members are actually from these regions. So in CE region, we have deployments with 2 operators in Serbia. 2 operators are finalizing deployments in Bosnia and Herzegovina. Montenegro, the biggest operator deployed there, and in Croatia, we have 1 operator that are currently deploying the solution, as well as part of their group deal. So hopefully, by Q1 next year, we will have, we expect to have, Serbia fully covered, having Telenor joined as well, and hopefully all the other countries in the regions as well, pretty much covered. Yeah, Nikosha, please. I cannot hear. Maybe it's a sound.
Sorry, yeah. So how do you sell? How do you implement in the market? So let's say you sign up the telco. So what's your sale? Like, who is the end customer? You mentioned merchants or the bank. Like, what's the model?
The model is straightforward. In order to speed up deployments, we come to the operator with a present, like, look, this is the platform. We are providing you basically free of charge. The whole installation takes, 8 minutes in real time, actually, what their network engineer needs to do. And we promise them basically a new revenue stream coming in straight away, on the other side. So basically, we are charging the authentication for the merchant/service provider. It's either fintech, banking, OTT players, e-commerce, whoever wants to verify the phone number, they pay for each authentication. Similar
how do you reach them? What's your sales channel? So you sign up the telco, that's relatively easy. There are 3 to 5 telcos in the market. How do you go after merchants, banks, and others?
That's the hard part for us. But like the channel partners, as I said, I mean, a lot of them, for example, in Serbia, we've signed up already 20 plus applications after Cargo went live. But on a global scale, we realize we can't go and chase all the end merchants, all the Facebooks, WhatsApps of the world. So that's why we decide, okay, let's partner with already established market players, such as Cinches, Twilios, Infobips of the world, who already work with them on the SMS side. You have payment companies such as Boku and Cetra who signed up these deals on the payment side. You have GBG, Microsoft, who are providing them already software in some other areas. So these guys are actually our channel partners, and IPification is already enabled through them.
Okay,
so,
I'm going to just stop
we
you there.
them to deliver the traffic. Yeah.
I'm just going to stop you there, only just because we need to make this as fair and square as possible for everybody. So there we have it, our first pitch of the competition. Again, very intriguing indeed, giving you a flavour and setting the tone of really what's to come as well. So thank you so much, Stefan Kosic.
Thanks a lot for all the
Fantastic.
questions. Thanks a lot.
Thank you.
Okay. So again, we want to make this as interactive and engaging as possible. So again, you're listening to this at home, at work, wherever you are in the world, you hear something you like. You'd like to challenge perhaps the startups with their idea in the chat on the different live streaming platforms on YouTube, wherever you're watching. Put in the chat where you're from and perhaps a question, or maybe within your network you know someone that can actually be a good fit and actually could help some of the startups that we hear today on their road to success. We move on now to our second startup of the competition, and this is Robert Ilyas from Croatia, right here in Croatia, with Identium. Robert. I can feel him coming. He's coming through any second now.
Hi everyone, I'm Robert, representing the Identium team. So this is how it looks when banks invest in mass infrastructure. Duplicated machines doing pretty much the same thing. Why isn't there a single ATM or a single POS device which then sends the transactions to the issuing banks? Now this problem is mostly solved and infrastructure is unified. But even now there are cases where it is not. Now, banks are in the early stages of digitalization, and it seems like they are going to do the same expensive mistake again. Instead of a joint effort, each of them is investing separately into digital onboarding technology. The same is happening outside of banking sector as well. This is, of course, a money burner for each of the banks. When banks compete with investing in mass infrastructure, it is, of course, great for technology providers, but it is bad for banks and their budgets. What we believe a solution for this is a single central federated identity which all the banks and other companies as well consume via simple API. So what we provide is a single digital identity for end users, citizens of Europe, which banks can use through a simple API interface. Our APIs provide the following functionalities: identity verifications through either self-onboarding process or fast-track video call, frictionless eIDAS compliant certificate issuing and document signing, two-factor or even three-factor authentication by using advanced face biometrics, and extracting external financial data via PSD2 bank interfaces throughout Europe. We provide B2B APIs for both web interface or for native mobile applications. Our APIs are fully digital, simple to implement, fully compliant with EU regulation, most notably Anti-Money Laundering 5 and GDPR, and customizable for each client. And we guarantee a 60% lower total cost of ownership with our services. Who needs Identium? Well, pretty much everyone. Every business that wants to digitally transform their channel towards the end user for sure. Regarding traction, we are post-revenue, we have 3 clients and 4 more are close to signing a deal. In B2C, we have more than 10,000 profiles in Croatia, and we will be expanding to Slovenia and Spain very soon. Regarding our milestones, about half a year ago, we got licensed from Croatian National Bank as EU-wide PSD2 account information service provider. We reached 10,000 users in Croatia last month. We will any day now sign a second partnership with financial agency, locally known as FINA, to become an eIDAS certification registration authority. And we will soon expand outside Croatia. We will soon reach 15,000 euros monthly recurring revenue, and we have a big digitalization contract close in our sales pipeline. We will also launch B2C Identium Now portal for end users, citizens, mid-2021. B2B market for our service is huge. It is 3/4 either not digitalized or digitalized poorly. In B2C, there are practically no similar services, and we are the market creators. There are 3 companies that are kind of doing the similar thing, but our value proposition is very unique and hard to compare. We are fully compliant with all EU regulation and with some global ISO technical biometric security standards as well. Our B2C model is freemium, and our B2B model is standard software as a service. We believe that the timing is perfect because young people don't want to sign any papers. COVID is making everyone speed up their digitalization efforts, and the European Commission is proclaiming that the next decade will be the decade of digitalization and electronic identity. As for the cooperation, we can fully digitalize the bank's process of opening current accounts, giving cash loans, opening deposit accounts for people that are not previous bank customers. We are a team of 5, soon 6 full-timers, professionals, highly experienced in KYC, identity, and personal data. All of us have worked for large European fintechs, and most of us have worked in mainstream banking as well. Please join our effort to truly digitalize the society and make people trust each other in the digital world. Thank you.
Fantastic. There we are. Identium, Robert, Ilias from Croatia. Right, once again, we jump back to our jury members and let's hear what they feel about what they've just heard. We'll jump straight back to our jury members and Robert as well. There we are.
Hi, everybody.
Okay, I can start. Okay. So we in Raiffeisen, we are already using a solution for the client onboarding for the new bank clients, and I saw it on the list of your competitors, so you know it's part of your landscape. It's called ID Now, and it's also based on a fast track video call, and we use it for already more than a year, and we're quite happy how the system function and what are the results. So what will be the reason and this additional value proposition from your side to replace existing solutions? So could we hear more about your uniqueness and these differences to existing solutions on the market?
I can give you a very short answer and a little bit longer answer. The very short answer is document signing. That means that a longer answer is that means that unlike ID Now, in the process of onboarding, we also issue a digital certificate to the end user who can then sign any document in the same process. So basically, after you onboard it, you just onboard him or her, you just push a PDF to him and he can sign it in the same process frictionlessly. The other thing is that the part of our process is also the potential gathering of his financial data from the other bank because of the PSD2 license that we have. So we can also pull the financial data based on which either we or you can do the scoring for the credit loan. And it boils down to that you just have an extremely frictionless process for his onboarding, especially in the case of cash loans.
Okay, thank you.
And as we mentioned, the ID Now, and that this is, let's say, a different use case. What would you bring additionally if we, for example, implement the digital signing of the documents of the PDFs? What is your differentiator between the, let's say, current implementation with the ID Now and your solution?
So regarding ID Now, you basically don't have document signing at all. You need a separate provider to do it, and in order to get a digital certificate, if you are using qualified certificates, which you probably are, but that's not necessary, but you probably are, that means that you need to have a video call center as well, which is an extreme degradation of conversion because you need to have agents which are 24/7 available for the video call to be able to issue the digital certificate. In our case, all of that is frictionless, so we are ID Now plus certificates plus PSD2 data plus some other fancy things which are maybe too deep to drill down into right now.
And what is the average, let's say,
question as before, so what's your sustainable competitive advantage? Like you listed on that sheet quite a few competitors. So, you know, how are you not going to be copied or compete with someone who has more money potentially to do the same thing?
Well, basically, we just showed you on the presentation the short list. The total list is more than 100 companies doing pretty much the same thing, because if you encapsulate KYC and personal data and everything into the definition of what we do, then you have more than 100 companies doing the similar thing. But if you try to compare and find the companies that actually issue digital identities to people, which is our core proposition, is that citizens get Identium ID card, then you have only 3 companies that are kind of doing this in some way. And all of us are more or less in a similar stage, but we have some advantages that they do not, while everything they have, we have as well. So basically, it is only just 3 companies. Potentially, Verimi from Germany is, I would say, our biggest competitor. Their advantage is that they have started maybe a year earlier than we, but their biggest disadvantage is that they are owned by large German companies, which are now focusing on themselves, and they are becoming like an extended IT department from these companies, which means that they don't have enough power to truly be independent and grab the European market. This is completely new. There are no players around it, big players, European players, or even global players, because the area of digital identity as such is only now being defined, roughly defined by European Commission. This is much different than KYC onboarding and, you know,
okay, so for you, it seems like it's quick to market kind of a game. You need to raise money and go quickly and grab the territory, grab the market share.
Exactly. It's the only viable strategy if we want to be #1 in the world. So apart from, of course, having the technology ready. We are also heavily working on preparing a B2C, or actually it's a C2C solution, where one citizen will be able to identify other citizens remotely, and will be able to sign a PDF which will be legally valid throughout the European Union without any integration with anything whatsoever, with extremely simple user experience on the web. So we are going to, push these solutions to any citizen in Europe that, wants to identify any other citizen in Europe on the other part of Europe or even world. And the part of that solution is also going to be the potentiality to check the financial data as well. So you are going to be able to check if a person in Finland is the true owner of his IBAN number and what is his average 3-month salary on his current account for any transactions that might happen between you guys in the future.
If I may jump in with a question. Hi, Robert. So maybe a question related to the previous ones. Can you please share your business model or pricing model? Is there any difference against the competition?
Yeah, absolutely. I mean, since we are an identity provider, we are drastically cheaper than anybody else. That means that if you go with Identium in our wishful scenario, where we open up the identities to other companies as well, then you will save at least 60%, that's a guarantee, or more than if you integrate any other technologies. If you want to go with Identium as a white label solution, that means that that's also doable. So we remove anything about Identium. We are just a pure white label. We don't like it, but we can do it. But then it is just cheaper. It is not drastically cheaper, it is just cheaper.
Thanks.
Yes, please.
Thank you, Robert. My question would be, I saw in the presentation that, via camera, you check the person. My question would be, how do you compare it with any kind of legal document, like an ID or passport? Yeah, basically, if you do it and how will you do it?
Yeah, sure. So we scan the ID document via the camera. This is a self-onboarding process, which the user does by him or herself. So we take a picture, we get all the information by machine learning OCR, which is quick and frictionless. And as a second step, we also do a hologram detection, which is a human-assisted machine learning, which basically searches for the hologram on the ID card or any other document and to make sure that it is not a fake. And of course, after that, the typical liveness, where we check that the person using the mobile phone is the same person that is on the ID card. That's very, very, very important. It should be resilient to masks and anything else, and it is. It is it's not our solution, of course. Not everything is our solution. It is from our sub-provider, which is #1 in the world.
So that means that basically you check if the card is fake or real, and if it's the same person, but the card itself you would not compare with any kind of, government data bank that this is the...
Oh, we would. We would. It depends on the country. We can do what we can do. For example, in Croatia, we can do it a bit like, maybe hacking it, I would say, but we can do it. So we can check it. I mean, legally, of course. We can check the basic data if it matches the one from the government sources. For example, Bulgaria is a perfect case where you can cross-verify pretty much everything from the government database. And in other countries, it is really a country-by-country specific case. So yes, we also do the external checks as well, wherever possible.
And that wraps up our session for the second startup. Robert, thank you so much. Fantastic. We'll see your fate, what happens a little bit later on when we find out who the actual winner is of this competition. We move on now to our third startup. So first we heard from the winner of the Serbia competition. Robert is the winner of the Croatian competition. We're going to hear now the winner of the Bosnia and Herzegovina and Montenegro competition. And from Montenegro, Nebojša Nedić with Bobot. I think Nebojša is coming through right now.
Coming.
Hi everyone, my name is Nebojša. Together with two of my friends, we are working on a platform for companies and salespeople. Companies will use the platform to calculate and pay bonus to their sales employees, while salespeople will have public profiles that they can share with others. Today, most of the companies use Excel to calculate bonus. This is quite complex, it's time-consuming, and most importantly, it lacks transparency. The key issue here is that bonuses are available only at the end of the period, which practically puts the companies in a situation that they cannot, during this period, create competition, ranking lists, and so on. Further, if they would like to hire some new sales employees, they can do this only using traditional hiring process. In our case, companies will simply create incentive strategies, apply them to sales data, and then our platform will calculate and pay bonus to their sales employees. And now this is the part where cooperation with Raiffeisen Bank would be beneficial, I believe, for both sides, as we would like to integrate our platform and with Raiffeisen, and in that way provide even more value for the customers. What you see here is our application. On mobile screens, you can see the public profile of the salesperson with their reputation and relevance. And this is actually the way how companies can later search for the best salespeople on the network. Unlike our competitors that are focused on delivering value only to companies, in our case, we believe that it is very important to deliver value both for companies and salespeople, as this is the only way how we can fully engage the salespeople into this process. The point here is that it is the personal interest of the salesperson that they sell more, because in that way they are growing their public profile, which then as effect also is good for the companies at the same time. Regarding the market, our total addressable market is quite big, as according to different research, in developed countries, more than 70% of the companies are paying bonus to their sales employees. In Western Balkan region, this number is significantly lower. For example, in Croatia, it's about 35%. Now, we talked to several companies from different industries, and we wanted to hear them, how they are doing this, and what do they feel about a solution like this. So what we find out is that all of these companies who were actually paying bonus to their employees were using Excel to do this, and all of them wanted to change this practice as they really didn't like it, and it was too complex for them. Regarding the opportunity, so once we integrate our platform with the Raiffeisen Bank, practically all of our customers will become Raiffeisen customers as well. So let's take the example of this insurance company that we talked to. So once they start using our platform, actually it will be their best interest to open the account in Raiffeisen Bank in case they don't already have it, but also at the same time, it will be their best interest to invite their sales employees to open the account in Raiffeisen Bank, because in that way, they will get the most value from this process and they will decrease their costs. Now, our business model is quite simple. We have three parts there. So we are going to charge monthly subscription fee for the companies that are using our platform to calculate and pay bonus to their employees. Again, when we talk to these companies, we find out that smaller companies with around 6 to 10 sales employees, they were spending around 8 hours per month to execute this process. But bigger companies with around 100 sales employees, they actually needed 6 days to do this, to collect data from different sources, process this data, and then execute these payments. Further, when network part of the company of the platform is developed, we are going to offer tokens to companies to search the platform for the best sales employees, but also we are going to offer platform ads for the companies that would like to stand out from the crowd, and also for third parties that would like to offer their services on our platform, for example, training for the salespeople. At the end, a little bit about us. I have Master of Computer Science degree in computer vision field. I have 18 years of experience in banking industry. Before this last 4 years there, I was working as executive director for retail and SME business, where among other things, I was managing a team of 170 sales employees. And some ideas that we are talking about here are coming from that part when I was actually doing this job. Mariana has 12 years in banking industry. She has mathematics and computer science degree. Her areas of expertise are product development, business process design, electronic channels, and she was developing software for the core system of the bank. Nina is coming from hospitality industry. She is a professor on Canadian Faculty of Hospitality Management on courses like customer service and sales management. She has 15 years of business experience, and she was managing high-class resorts. All three of us are very well known to each other, and we are coming from the companies that were using Excel to calculate bonds. So thank you for your time, and I'm looking forward for your questions.
So there we have it. There we have it. Nebojsa with our third picture of the session of the competition. Bobot. Again, we jump back to our jury members and let's hear what they feel about what they've just heard. Jury members?
Hi.
So,
yeah. Can you go first? Thank you for presentation, Nebojsa. Really well done. One thing that wasn't covered is competition. I saw in the material that you identified Salesforce as the main competitor. Could you please explain what's the difference, what's your advantage, and how are you going to fight them?
yes, so obviously, of course, we have competition. And the key difference here is that all of these companies are focused, all of these providers, software providers, are focused on companies alone. So they don't really provide any value for the salespeople. So the salespeople are employees wherever they are working, and they are doing this job, and that's it. But what we wanted to change here is to create the environment where salespeople also have the interest to sell more, not only because of the money that they are getting from the company, but because in that way they are growing their reputation and relevance, meaning what products they are selling and so on. And in that way, this is becoming the interest of the salesperson to sell more, other than the financial interest, obviously. So this is a big difference, and then this network part of the platform, how we call it, then can actually change the way, can literally speed up the whole sales process for the companies that are working there.
Okay, so if we say that in Raiffeisen, we're not the company who is using Excel for the variable performance calculation, we use banking software, which is highly automatized. This additional value proposition that you're offering beyond that, do you think this is enough that company like Raiffeisen will switch to your solution?
So you know, Raiffeisen is a bank, but let's talk about, because you already have the infrastructure to execute payments and everything, because this is practically the banking, right? But let's talk about some other company that doesn't have the infrastructure, like any other, like these insurance companies, or I don't know, some marketing agencies that we talk, that they have around 100 sales employees. So, you know, for them, they are processing this data, and this is actually quite complex for them. And when they process this data, then on top of that, they have to execute the payments as well. And then they can do it in several ways. They can export it to the file, send it to the bank, execute these payments, and so on. So what we are proposing to them for these companies is that literally on one click, so they define the strategy, and they literally with one click perform all these tasks all together. And then it's a question whether the company, for example, this insurance company, whether they would switch to Raiffeisen and say, listen, open the account, let's open the account in Raiffeisen, because that's the way how we are going to make these payments to our sales employees practically flawlessly without any effort. So this is the one part. And the second part is, once they are part of the network, then when I was doing this job, for me, it was really hard to find new salespeople. I mean, we were doing this using this traditional process. We simply announce the advertisement, then we look for the employees. With our platform, we can actually search based on their reputation, and this can really significantly shorten the time, decrease the cost, and can put us in a very good position, especially the companies who are, let's say, preferable employers, because, you know, everybody would like to work for them. So the whole environment, we are creating this competition for the employees as well. Like employers has to work hard with their employees to save the best people. If you understood this detail.
Yeah.
Okay. And if I get it, you are then really creating a freelance platform for the salesperson, so that I, as a person, can go to the platform and really sell anything that is there.
Yeah, so one of the consequences, so we are not doing this in this phase. So in our phase where we are right now, this is not the interest, this is not something that we are pursuing right now. But one of the consequences is, you are right, because what can happen is that as more and more salespeople is present on the network, and that number can grow really fast, because, for example, just several companies that we talked to, they have, all of them were having like 100 sales employees. So we can really, for the specific region, we can really reach really big numbers of salespeople that are present on the network. And once that happens, then as a natural consequence, the companies can then search for these people and start offering them the contracts to practically sell their products as well.
I would also have a question, Nebojša. I would understand that, you know, when it comes to bonus payment, performance, anything like this, it's rather confidential data, right? So I was wondering, what's your kind of model of using the tool? Is it on-premise or cloud, or how do you deal with that confidential data?
Thank you. So that really depends on the company. So where we are implementing. So it can go it's kind of a technical thing. So some companies will prefer data to be present only on their premises, and in that way we will have to install the certain environment with that. But a lot of companies will not have a problem with this, and they will use our cloud solution. So how we organize it is that we have this cloud solution that will be useful for probably smaller, medium companies, while the banks will probably opt for implementing the data part of the environment locally, so they don't kind of risk it to be present anywhere else. So it's really up to the implementation. It's not. It depends on the wish of the company, but both are possible.
Got another 3 minutes left, so another perhaps two more questions. No?
I would have a question maybe regarding the traction, if you can drill down. So what's the kind of sales so far, and what's your strategy to expand to larger scale?
For us, it's really important, this cooperation with the bank. I mean, we had a lot of ideas how we can do this, but I think that the most optimal solution is simply to do it with the partnership with the bank, because in that way we will immediately be exposed to a larger number of customers. So this is kind of the way how we would like to approach this in the early stage. Right now we are in the final phase practically of our product, and we are talking to. We have, I don't know, 6, 7 companies that are waiting for us practically to offer them this solution. So this is where we are at this moment.
Okay, what would be the critical success factor or number of clients in order for this case to be successful? Did you make any calculation or so?
Listen, it's we didn't really go into this direction, meaning like what is the minimum part. We were more interested in how much we can reach, or what is the potential for the product and everything. So I can tell you about this. So in our region, only Western Balkans, we have around 400,000 companies together, and if we take around 20% that are paying bonus to their employees right now at this moment, so I'm not talking about like Western Europe or something where there is even around 70%, then our potential is really huge, especially when we bring in the sales people on the network as well. So this is kind of a driving force for us, not really this minimal, especially because our cost is really quite low, so we don't have any kind of big cost or anything. So it's quite simple for us to do this.
Okay, I think that wraps up our last interrogation of our third startup pitch. So Nebojša, thank you so much, and we'll hear very shortly, a little bit later on, your fate and the fate of the other startup pitchers as well. So that wraps up the pitching competition. We've had three very diverse big ideas. Very difficult for, I'm sure, the jury members to decide who's going to walk away a winner, and I'm sure quite tough for you as well. But listen, we'd love to hear what you think. So in the chat areas, in the chat box, in the areas where you're watching online, let us know how you feel. Let us know who you feel should walk away a winner. All that leaves me now to say is thank you so much to our jury members. Marko here on stage with me now, Nebojša, Kenan, Petar, Istvan, and Maya. Thank you so much for being our jury members. They will now walk away. They will go off somewhere and hide away for a little while and discuss, debate, and come up with the winning startup of this competition. We're here, who the winner is, on this stage at 2 o'clock sharp. So 2 o'clock, back here to find out who that winner is. All that leaves me now to say is thank you so much, Marco, and we will carry on to our next session. Thank you so much.
We have a good job ahead of us.
Okay, ladies and gentlemen, we move on now to our next session of the day. So if I ask you, banks using digital to return to their roots. Now, if I ask you how you do that, I'm sure maybe some of you will have an idea, or why do that? Again, some of you have your own ideas on that. But the next two people here on stage are going to discuss that idea and come up with an answer and give their vision of how everything should unfold as well. So we're delighted to have here on stage the CEO of Raiffeisen Bank Croatia, Liljana Kesaric, together with Nikola Pavicic from Nikkei, the moderator. Thank you so much.
Can someone wave? You can hear us? Yes. The mics are on. Perfect. Thank you. Welcome everyone to this fireside chat, the first live of the day in this really, really weird and unusual times. It's about customer-centric design, and the title of this fireside chat is Banks Using Digital to Return to Their Roots. I believe in this fintech world, banks are seldom perceived as innovators, and terms like CX and UX and agile are usually more attached to startups and fast fintech movers than to banks. But I believe things have changed a lot in the last few years, 3 to 4 to 5 years, and then things will definitely change in the future. It's my honor to have with us here for this fireside chat today Ms. Liljana Kesaric, the CEO of Raiffeisen Bank Croatia. Welcome, Liljana.
Thank you very much, Nikola.
It's great to have you here. So we don't have much time, so let's jump straight right into it. Raiffeisen Bank in this part of the world is a major regional bank. How do you, as such a large financial institution, perceive the interaction of finance and technology? How do you see that?
Yeah, finance and technology, it can go not one without another, yeah? I started in the bank in 2001, actually. That was my first experience, was building the first internet banking for our customers. From, being an innovative bank back then was something that really pushed the bank going further. Years after, I think that the banking sector in general actually focused on a bit different stuff, yeah? And what I really think is that, coming back to the roots, how we did things back then is something that, will make banks really innovative again. So major challenge within our bank was actually lagging behind some technology companies in the last 10 years. But understanding that really, building on the customer relationship that we have been having and building this innovative culture internally within the company is something that will push us going further. So to really explain it in a concrete example is, you know, having the IT as a service and the maintenance organizational unit is really not sustainable going further. This is what we changed internally in Raiffeisen Bank, and this is our way, and this is really what we are very proud to do, and going further, we will push it even harder.
Perfect. Thank you. One interesting thing is that this challenger is in every sector of finance, I believe, you know, in insurance, in banking, in investment. In the last, what I said, 5 or 10 years, we had all these challengers popping up, and that really kind of challenged, and they obviously fight for their part of the market. When did a bank like yours, like Raiffeisen Bank, become aware of these trends? Because a lot of banks are going to tell you, we've been there from the beginning. Maybe that's not true, but when did you actually realize, okay, like we really need to focus on this?
I can talk from my personal experience, really. You know, when I really started to actually read and, you know, experience these amazing disruptive stories, for example, I was the first, probably one of the first users of Revolut, yeah? It made me really in the position, you know, I was in the position to really understand how complex things are within the bank, yeah? So it was not like one breaking point in which we understood it, but actually our customers telling us, you know, guys, it's so complex, you know, I really want to use my money on an easy and seamless and transparent way. And we have been having, like, for example, internet banking, which you needed to use like 2 or 3 passcodes to really be able to authorize the transaction. So that was not really what the customers were expecting from us. They were, you know, changing that paradigm is really what I say, you know, it's not only about technology. You know, technology and technology legacy is one thing that the banks have to deal with, like we are dealing with, but as well this psychological legacy, yeah, the mindset legacy that we are having internally in the company, you know, being a big bank which actually, you know, creates services, products, is something that we are tackling every day, yeah? And I think that this part of the legacy is even bigger for the banks to deal with, yeah? And building this, you know, mindset of the innovators internally in the company is something that is my daily job, yeah? Not only really putting the technology, because technology cannot solve the issues. Technology can help, technology is there, but actually connecting people around the technology and really solving problems, this is what I think that the banks are here for.
And when you said this realization that happened, what would you say some of the biggest challenges? You just explained exactly what it is, but obviously change management, obviously adapting to this. It's not just about, you know, putting the technology. It's about, you know, working internally as an organization as well. And I would dare to say, and I was actually at a conference in New York last year when we could still go to conferences and travel. And what like one of the speakers from CB Insight says like that all the major banks now, investment banks especially, you know, like Goldman Sachs and, you know, JP Morgan, etc., they consider to be tech companies, so more like a Google than a bank. Would you agree in that? Would you think Raiffeisen Bank is on that trail? Do you see the bank like that?
What I actually, you know, my expression is, this is a bit stretchy, but I use it, you know, people don't need banks, but everybody needs banking, yeah? Okay. We all want to do the banking, yeah? And I think that, you know, the role of the banks are changing, so banks need to really connect easily the people with their money, with their opportunities. Yeah? Technology is here to help, of course, and technology was always available, but actually to connect the people around the technology and to really align on how we work together, that is the major challenge for us. Yeah? Yes, of course, you have mentioned agile, etc. to be able to really shift that paradigm internally within the bank, you know, you have to really acknowledge that there is a part of the bank that really needs to provide, you know, services which are critically important. But as well, shifting this paradigm into innovation teams, building them around technology and adapting the way how we work together, of course, insourcing the critical knowledge, that was a challenge for us. So what I would say, yes, we are a tech company as a bank, but with a human touch.
I think I'm going to advocate for banks a little bit here as well now.
Thank you for doing so.
You mentioned Revolut before, and obviously as one of the major players here, but of course there are many, many others. And a complaint that I often heard from banks is like, yes, of course, we you know, are aware of the technology, we're aware of the changing tides, as you wish, but what our requirements and our MO is very different from these challenger banks. You know, we have to manage branches, we have to have all this traditional banking stuff. Regulatory requirements are often different, right? How do you see this interaction? Do you think it's really easier for challenger banks, at least in the beginning?
You know, yeah, from the outside perspective, it looks easier, but I think what we as banks can lean on is really this long, sustainable relationship with our customers. Yeah, we know, you know, we are here for decades. Yeah, Raiffeisen Bank is actually celebrating 26 years in Croatian market. And, you know, we have internal muscles that we can lean on. The only thing which I think is for us crucial is, you know, to have really this innovative spirit, these sparks within the company that can really bring the company toward the second maturity phase. For us in Raiffeisen Bank, you know, the major strength that we see and that we lean on is really, you know, we have always been evaluated from our customers as the bank which really builds this relationship. And then we said to ourselves, you know, but why are we building services and products and functionalities which our customers are really, you know, having difficulties to use? Because we probably didn't put the customers in the middle of everything that we do. And this change of the paradigm, you know, it helped us a lot. So this is, you know, putting the customer in the middle of whatever you are doing. Nevertheless, it's a technology, it's a feature, it's a stuff. It may be a report, it may be a call center agent, it may be, you know, the board that is communicating complaints area. Whatever you do, really be aware that the customer is in the middle. Ask for a feedback, iteratively change, test with the customer, and be able to give up on certain things, you know? Accept that some things which you did are really not good enough. Huh?
I'm glad you said that, because I'm going to dig a little bit deeper here on this, and the title of this talk is Customer Centricity. You mentioned to me before that you're almost obsessed with customer centricity. How hard it is, this paradigm shift that you just mentioned, how hard it is to switch yourself completely and put yourself basically in your customer's shoes, right? As a bank, as such a large institution, not as 5 guys that are doing a challenger bank right now, right?
You know, what I always like to think is, you know, every day is a new day to change. Huh? The second of all, you asked me how hard it was. You know, I always lean on the team that actually developed this first internet banking. This is still the team that is internally working in the bank. Yeah? So you have to lean on the people, because we work with people, for people, but really, you know, bringing this perspective of easiness, simple stuff, human approach. This is what stick to this company, I mean Raiffeisen company, as one of the core values. And I can tell you like few examples, which are maybe not tech examples, And you can really do it, you know, you can really do it in different touch points, because we as the bank, you know, what is our primary goal? We want to win the customer heart, and we want to win the employee heart. And those two things, they need to go together. So for example, what our customers are telling us, you know, guys, your complaints process is really, you know, it's painful for me, yeah? So why don't we change it? You don't require much technology to do it. Yeah? Why our answers toward the customers can become simpler, easier. For example, in the contract area. So our customers were telling us, you know, your contract, they have 10 pages. It would be easier for me if you put a table of content, if you put the important stuff in the beginning. And this is what we did. And we are piloting those contracts in our 3 branches. And at the same time, we are actually piloting them internally with our people, you know? So you don't have to be, I would say, a magician. You just have to really open your heart, open your ears, and listen, yeah? And be ready to experiment.
It's interesting to say that you work with your employees as well. That reminds me of the parallel that we did before with the tech company. I know tech companies do this a lot, you know, the Googles and the Facebooks. They always test all the products with their employees, and you know, they have tens of thousands of those, so that's a very good data point. Is it same applicable for you? Do you launch your products or test your products? You mentioned contracts as well with your employees as well?
Of course. Of course we test it, you know. But what is interesting, what we discovered is, you know, the results of the testing internally and externally, they're quite different. Yeah, they're quite different.
It's not that easy.
It's not that easy. It's really not that easy, and that's why, you know, we are actually calling our customers, you know, a smaller group of customers to test it with us, because what we found out that you know, employees can sometimes be still looking it from inside out, you know, but what we want to have is really outside-in perspective. So yes, we are doing both. That is the correct answer to your question.
And you said, like, we spoke a little bit about, you know, this customer centricity. We spoke about tech companies and challenger banks. And in an intro, we kind of announced, yes, there was like a shift maybe 5-10 years ago where we said all these Revoluts and moving in, and suddenly everyone can open a bank with like a few clicks, and you don't have to go to the branch and so on. And as we said, among others, you know, Raiffeisen Bank is catching up, is offering products that are equally, or might I dare say, even sometimes, you know, of a higher quality than those challenger banks. But where do you see the perspective of the banking sector moving forward, for example? How are they going to compare market-wise with these challenger banks, let's say 5 to 10 years from now? I know it's very hard to make these predictions, but just like roughly.
Really what I see as the major thing for the banks will be actually to achieve this consistency. Consistency across channels. As you have mentioned, yes, we're having branches. A lot of our customers are visiting branches. But what we want as a bank is really to provide those wow moments on the digital channels as well in the branch. There has to be a consistency in between. Yeah? This is one thing. And the bank which actually is able to provide those moments of the excellent customer experience on both will be probably the winner. The second stuff is where I see, you know, the opportunity for us as a banks is really this human approach, you know, to change this paradigm that banks are strict, that they use a very strange language in really communicating with our customers. This is where I see the opportunity for the bank lies.
I think this is, I think it's about branding as well, right? And if you're a well-established bank, you have this brand that helps you in a way. Sometimes maybe it doesn't. But then, as you said, this putting a person in the center really makes a difference. I don't know if any of you here, not too many, have had a chance to, you know, interact with challenger banks, and obviously that's not easy either, and you have to comply there. Do you think you can appeal also to the people that you mentioned you were one of the first people that used Revolut, right? Do you think you can appeal to the let's call them younger people that would maybe apply for Revolut, but as a major financial institution, you can actually now appeal to them equally as a brand.
Of course. Yeah, I truly believe so. I truly believe so. And I truly believe, what makes me happy and what makes my heart really warm is that I see a lot of new kids on the block in our bank, bringing this fresh perspective because, banks, or at least I can speak about Raiffeisen, is becoming, a place that people are doing interesting stuff, People are working new technologies. There are people which you can learn from, So there are older guys, but they are very, very experienced. You can learn from them. And this is not, the setup that each and every company can provide. So I see a lot of new kids, coming in the bank, really starting to work for the bank in different areas, bringing these sparkles of innovation. And I think that there is a hope for us, of course.
You don't necessarily have to give us any numbers, but we spoke about, Goldman Sachs and being a tech company. Is there a significant shift, no pun intended, obviously, towards more techies in Raiffeisen Bank compared to like 3 or 5 years ago?
Of course.
Okay.
Yeah, I see that shift. I see, of course, we are also enabling, kind of a setup, but actually, I see the people that are really less bankers, more, people who are really able to do things with common sense, and they really, it's not about putting those people in the banking environment. It is, for me, the opposite way, Me right now as a CEO, I have a challenge, to really look the whole bank perspective. And I really want to build up this innovation in whatever area, compliance area, audit area. You can always use some of the basic principles of the agile in wherever. And, bringing this fresh perspective from the outside, it really helps us tremendously.
Yeah, indeed, people always look at these parts of digital innovation and, mobile phones that you can interact with, but there's so much more innovation that can happen in finance, in fintech, front office, back office operations, clearances, etc. That I think we're only at the beginning of all this thing. Unfortunately, we are running out of time. They're going to kick us off soon, but your last outlook, you said, I think what I took from your talk is like technology is obviously not enough, right? You need to build a whole organization with a different paradigm, different mindset. Your closing words for the perspective, what do you want to say to the audience here and that are streamed online? Thousands of people watching us.
Thousands of people watching us, yeah. Building with people, for the people, and really based on the principles of clarity, simplicity, and human touch.
Perfect.
This is where the banks are going.
Thank you, Liana. It's been a pleasure. Thank you to our audience, and hopefully see you again next year in
Nick.
slightly better conditions.
Thank you, Nick.
Thank you.
Okay, so there we have it. So we've come to the end of our first section of today. We will have a very short break, back on this stage for more Shift Money 2020 at 1:30. So 1:30 CET, back on this stage for some more Shift Money 2020.
Banks must have an online payment proposition to take control of the payments of their merchants. To do this, banks have the choice to build, buy, or borrow their payment platform. Of course, banks could try to develop software to become a PSP themselves, but this takes a lot of time, money, and knowledge without any guarantee for success. And why build it yourself? We are Magnius, your technology partner in the payment industry. We provide a white label intelligent payment platform, 100% compliant, and continuously up to date with the newest techniques and standards. A safe and scalable solution for banks, acquirers, and PSPs who want to offer their clients a smooth payment process. With Magnius, it is possible to launch your own online payment proposition with global payment products fast and remote, in your own corporate style. Want to know more? Get in touch. We are happy to help.
Ladies and gentlemen, welcome back to our next section of the day with Shift Money 2020 in partnership with the Singapore FinTech Festival. So already this morning we've had insights, ideas, debate, challenging ideas as well, all about FinTech, all about the financial landscape and really the effect of it today, but maybe more importantly, the effects of it tomorrow and in the future as well. Right now we jump into digital onboarding, full and regulated. So gaining new clients in environments where regulation marks a specific process to carry out necessary procedures is really the name of the game in really what it's all about right now. So right now here on stage for Shift Money 2020, please welcome from Asseco Southeastern Europe, Krešimir Suljak, and from Addiko Bank, Relja Markovic.
First of all, thank you for being here, and thanks to organizer for the invitation, of course, and many thanks to Mr. Relja Markovic and Addiko Bank for their readiness to participate, which will hopefully give you an insight how does it look like going digital and fully regulated from bank's perspective. We will try to make this presentation non-technical as much as we can, as technology used in this project is flexible enough for any future changes that are expected. So let's move to the next slide. So the onboarding. In general, there are three main types of onboarding. First one is on-site, and it is the conventional method. The customer goes to the branch or store and must show identity document as a proof of identification. Also, and to submit some various papers, documents, put the signature on it, etc., etc. The second type is semi-on-site or semi-digital, where documents or even the whole process is digital and everything can be filled at home, but still customers must move to the branch to hand them in and to prove their identity. And there was also another way for this semi-digital, which is called penny transfer, but we know what regulator thinks of it and we will not mention it anymore today. And that leaves us with the third one, which is digital. And it refers to any non-presential identification process that allows an organization to register a new customer. This process is completely remote and customers do not need to go to an office or a branch if they do not want to. So they're able to become customers remotely with the same security and can guarantee for their identity. This onboarding or this digital onboarding, this is exactly our goal or our common goal for many years now, to offer it and to implement digital onboarding process with the same technical and legal security as a face-to-face verification in the branch offices. I think that technology is ready for quite some time, but regulatory frame was something that we were all waiting for. Relja will tell you more about Addiko's path and how they made it fully digital and in-sourced as it is now. So, as always, when you're trying to change something and when you are offering the service that basically wasn't implemented in your organization and not to mention your country, you are going to find yourself with at least two teams on completely different sides. So one is business and the other one is, of course, legal. And business always sees this as an opportunity to acquire new customers, to upgrade the value of existing ones. And legal is always, you know, legal. So they want to see how this process can be official with all the legal, regulatory and best practice requirements covered. Luckily, on Addiko project, we met teams with quite some experience, but nevertheless, those 6 months, and when we look at it now, it is kind of perfect learning curve for all sides, included vendors also, and you'll see why later. So, despite what you see on the slide, one more thing was very important, to make it easy as possible for customers in an environment that is strictly regulated. Our customers are used to a constant change as innovations are evolving rapidly, and things that were not possible or were complex and complicated are now just 2 clicks away. The expectation to make this digital onboarding, this particular digital onboarding, possible in 2 clicks or 2 screenshots, this was never what we're what we were trying to achieve, as this was basically, or this is basically impossible. So we rather focused our efforts on how to create simplest but legally compliant KYC, on how to implement tools such as OCR or co-browsing to reduce their effort and time consumption on customer side, to make video identification process part seamless and structured until the moment customer is sent to trusted provider site to enroll for the qualified digital signature. And I think the first impressions are telling us that we succeeded. So, of course, this doesn't mean that we will stop to improve. Anytime we find the tiniest detail that can be optimized, we react instantly, and this is thanks to technology used in this project that makes us ready for all types of the anticipating regulation changes. So now I can maybe explain why I'm so much into regulation and regulatory framework. The answer is simple. Financial sector is among the most heavily regulated sectors in the world. And on the other side, there is Asseco, one of the leading technology providers in Europe, that is working with the biggest banks and insurers. So obviously that leaves us almost no room to go out of the regulatory frame, but don't get me wrong, we support and we are always looking up to what e-banks, digital banks, neobanks are doing together with their own vendors. And they're the ones disrupting the market, and they're the ones most creditable when it comes to regulation changes and adjustments. So collaboration between fintechs, neobanks, traditional banking is driving all these advances in digital onboarding processes, and keep up the good work. Asseco, with its customers, is here to provide bulletproof, legally compliant technology that enables our customers to perform fully digital onboarding and related processes. And speaking of compliance, the first thing that crosses our minds must be know your customer. So this is the process or the practice. One goal, of course, is to verify the identity of potential or existing customer. And another goal is to fight the potential fraud. On our common project, this was priority number one, together with to make it easy and fast for the customer. Our thinking was that the customer really does not have anything to do with the technology and controls that are applied in the back end of the digital onboarding process. Also, do not forget Addiko is an international organization having affiliates in 6 countries, I think, and we had to think about implementation there, even though compliance in the financial services are distinct from country to country. So each country has its own laws and policies, fields that needs to be filled, documents that must be uploaded. Here in Croatia, we focused on two mandatory requirements. The forms fulfillment and uploading processes in KYC are easy and fast, especially in the backend, where miracle happens and those control mechanisms are doing their job. We got rid of all unnecessary steps, unnecessary questions, unnecessary messages or documentation. And even though we would like to make it even more faster and customer friendly, we were aware from the start that digital onboarding processes that many of us see as very fast, very easy, and very nice looking do not comply with what our regulator and laws are requiring in the process. So the banks are obligated to do it like we did on this project. And therefore, we separated the onboarding process in at least 3 parts. The first one was KYC, which basically is client side. Then the video, which is the process where the identification happens or where the identity is confirmed. And the third one was electronic signature issuing. And although it is all part of one process, it was easier for Addiko and for us vendors on the project to focus on what matters the most in each of these 3 areas. How did it look like from Addiko side? I think it's better if Relja will tell you. So Relja, now the stage is all yours.
Thank you, Krešo. Before we move on, I would like to make one step back and tell you how the idea of virtual branch came to our mind. So Addiko started the digital transformation quite early, and as expected, in the first phase, we were more focused on improvement of our daily banking services. We implemented entirely new digital banking architecture. We launched new internet banking, new mobile banking, and also we implemented chat banking. In parallel, we implemented a new process for cash loan for private clients that set a trend soon to be followed by other banks. The new cash loan process was automated with approval within 30 minutes, and the client needed to present only his ID card. I don't think that at this point it was seen as a part of digital transformation, but in my opinion, it really was, because we had to check, adjust, and change almost every step in existing processes to fit in our digital agenda. And we were the first bank in Croatian market to offer such an optimized process back then. This fast cash loan was also offered in our self-service express branch. When the credit bureau was temporarily shut down in 2018, we found a workaround and decided to move our express branch with its optimized cash loan process to a virtual world. So, any resemblance of the virtual branch to the express branch is fully intentional. From the technical side, we knew very well that it would not be a simple project. We had to integrate 15 different systems originating from 9 vendors through 14 integrations. Some of these systems were on our premises, while some of them were in cloud. From technology point of view, we were already familiar with digital certificates and digital signatures. And we also thought that we knew what video identification was. A true challenge was basically on the right side of this slide, legislation, both on European Union and local level. For example, one of the biggest challenges in the project at that time was the documentation of technical requirements that must be met for proper video electronic identification were issued with a 6-month delay. At some point in time, we realized that we cannot wait anymore for these official requirements to be issued, and we decided to implement an alternative solution. The alternative solution was a cooperation with an Italian trust service provider, which is authorized to issue qualified digital certificates according to European Union legislation. We engaged them to issue certificates to our customers on the basis of video identification, and the trick was that, in this case, our identification was not based on video identification, which still wasn't regulated fully in Croatia, but on digital certificates issued in the European Union. With this workaround, we managed to finish the project and launch our virtual branch with full end-to-end digital experience. Not only we were the first in Croatian market, but our virtual branch was also recognized as the best product innovation in the whole of Europe and received Retail Banking Europe Award 2019. So, we finished the project and virtual branch was a big success, but we knew that we could do it even better. We saved the project with identification to digital certificates, but we paid a huge price in user experience. It was not as smooth as we wanted, even though we have put a lot of effort to make it as smooth as possible. We had a functional solution, but we wanted to make it better and get back to our original idea. Therefore, we started a new project with goal to switch from certificate-based identification to a real in-house video identification. But it was not just a matter of bringing the video identification in-house. We were also switching to FINA as our new trusted service provider, meaning that we had to become a registration authority for FINA. This little detail brought additional complexity to the project, additional requirements for video identification, and moved this project to a completely new level by opening up a bunch of new topics in all areas. From implementation of technical solutions and setting up new procedures to a very detailed specification of physical workspace for our contact center agents, who were additionally educated for video identification. Croatia will provide you with more details, so I will not go any further, but would like just to thank ASECO for the excellent cooperation and flexibility during the entire project, in which we encountered a lot of challenges, and all of them successfully solved thanks to the true engagement on both sides. Of course, that I cannot share a lot of details about results of virtual branch, but I have a few interesting facts for you. So, even though 55% of the clients are from Zagreb and Central Croatia, our virtual branch covers the whole of Croatia, even small places on isolated islands. So, one branch for the whole country. It is web application, but 85% of visits to the virtual branch come via mobile devices. And according to the number of loan applications received, virtual branch covers approximately as many as 7 average physical branches. So one virtual branch is 7 physical branches. And in general, the structure of clients who are visiting a virtual branch is a bit different than in physical branches. For example, younger population, with higher educational level and high income is a bit more frequent in virtual branch than in the regular physical branch. And for the end, I would like to highlight once again we have built the first fully digital virtual branch where we are offering full end-to-end online experience from identification to signature of the necessary documents, end-to-end current account opening, and first fully digital end-to-end process, both for new and existing clients. And I invite you not to take my word for it, but also to see it for yourselves. So visit us at virtualposlovnica.hr. Krešo, back to you.
Yeah, thank you, Relja. Thank you for this explanation and for the kind words for Asseco. The feeling is the same on our side, and together with all parties that participated in the project, I think we really did a good job. So thank you once again to you and your team, of course. So Relja mentioned the video and the challenges and the new things that we learned and we found out during the project. So the video is main component that makes the digital onboarding, this type of digital onboarding, the same or equal to a face-to-face verification in the branches. And yes, as Relja said, this was something that we were all waiting for to become regulated. And you saw the name of the law. I didn't try even to translate it to English because it's very complicated and long. So on Addiko project, Asseco, I think, took care of almost everything that is happening on the bank side in real time. And most of the regulatory and audit requirements fell on our back. Luckily, I would say, because that was a great opportunity to develop and deliver new things and to learn a lot, of course. And so a few words about the process and where video comes into the place. So the process starts on Addiko web pages where customer begins his digital journey. And after the KYC is completed, Asseco receives all collected data together with the OCR snapshots. And then the video is turned on. Customer and an agent are having a conversation that usually starts with a little chit chat, but when the identification part starts, it becomes more serious. Agent follows the script or a phrase book that is made for this purpose and that is equipped with all the necessary tools to perform the digital onboarding by the law. First, agent will check the data collected in previous steps. Then the agent will compare the snapshots made previously and those made just now, and of course, compare it all with the live person on the screen. Agent will send and validate OTP and fulfill all other necessary steps that are part of the local and EU laws. And not to forget, the video identification, this is the recorded session. And before sending everything, all customer data and this package to trust provided services, and Relja said that it's FINA, 4 eyes principle check method is one last step. And due to our common desire to make this all easy and fast for the customer, this other pair of eyes is luckily not a living person. It's a technology, because if it was a person, it would have dramatic impact on the session duration. So there is a technology checking all the steps and elements of the process and validating each one of them, even the video resolution, the surroundings, sound, light, etc., and everything. And if everything is okay, customer is enrolled to a process of issuing qualified digital signature. And after this part is completed, he used this signature to sign a contract with Addiko Bank. And I think that this act makes the digital onboarding process fully regulated, making this customer equal to one that onboarded on site. So the project, and a few more words on the project itself. When we started, we were so sure we know everything and every step and requirement that must be done, and but that wasn't exactly the case. Biggest surprises were where external auditor asked for these two things, and those are related to video and the video session. First one was that bank has to keep recordings of unsuccessful onboarding processes, which has something to do, with this capacity, which is now much bigger than we thought it would be. And that was the problem for the bank, because I think it's kept for 11, 12 years or something like that. I'm not sure. And the second one is everything that is collected during the process must be encrypted and can be unlocked only with the key issued in the key management system. Despite our thinking that this is not going to be an issue because each component of this system is installed on bank premises. And you know, all of this is happening a month before the planned go live date. And we made it eventually. Everything is in place now. Files are encrypted and locked, and unsuccessful tries are also archived. So I think now, when everything is finished, our existing customers keep asking me a lot of questions on the details, of course, and how this was made. And the biggest thing, I think, something that we took from this project and what we learned, I think it fits into one sentence, and it is the sentence, it is about the trust. So if you want to digitally onboard customers, make sure they sign their application, which basically is a contract. And that leaves you with no choice than to implement qualified electronic signature issuing in the process. And in the most simple formulation, trusted provider must trust you when you send the customer and its data. And this is why all of the things we mentioned today are making sense, and this is why we see this project as first fully digital onboarding in Croatia. Relja mentioned that this is now that Addiko Bank is now recognized as a registration agency. And I remember one funny thing when this mister from the audit company said, now you can sell or you can outsource this service to other organizations, but I don't think that Addiko has a business plan to onboard customers for other banks. What do you think, Relja? Do you have such plan in mind?
I don't think so.
You don't think so? Okay, so we are on the last slide, and I will finish the presentation with something that doesn't have much to do with the onboarding or acquisition. It is a retention or how to provide exceptional customer service using tools implemented in this project. So this is, let's say, the phase 2 with Addiko, and we started to work on this. And you know, we all see how used to video communication we are now, and how this technology adoption happened more quickly than any of the forecasts predicted. And if we go back to the bank, how many processes, and in banks, how many processes are expecting the customer to show up in a branch? Numerous, I think. Even the guy who was onboarded digitally, if he loses the credit card and calls the contact center to block it, he will have to go to the branch to pick up new one. And why? Is it because of the internal procedures or maybe the whole environment? As for some, it seems that this is the only way to prove identity, to go to the branch. Or imagine the loan application process. Going to the branch for 5 times to discuss terms and conditions, to communicate your needs and expectations, to expect the advice from the banker. Do it over video. It's a perfectly convenient tool. And if it's, of course, end-to-end encrypted and due to law obligations installed in the bank infrastructure. Or let's say the co-browsing. How many times our customers are utilizing contact centers trying to do simplest of the actions, paying the bill over the internet banking, and something goes wrong. And the agent spends a lot of time with the customer on the phone trying to help, but with an uncertain result. If customer turns the co-browsing on, I guarantee you that agent will recognize the problem in a matter of seconds, and everybody is happy, I think. So the message is, acquisition is, of course, very important, but don't forget the existing customers. Open these new channels to them also, align your internal procedures with the new trends and law changes, and make most out of it. People are ready to use them, make sure everything is secure and seamless, and it will certainly have some impact on your customer satisfaction. And we all know that positive impact on this field has something to do with the positive trends on a revenue growth field. And not to forget, digital onboarding and related processes are transversal to many other industries, such as gaming and gambling, car sharing, hotels, car rental, insurance, human resources, etc., etc. And the SEC already have a number of successful stories to share from that industry sectors. So maybe next year, and hopefully in person, we will share some other experiences, some other stories from other industries. I think we are done for today. Hopefully we fitted in our slot. I didn't measure the time. And thank you all for participation. And I don't know, Relja, something for the end.
Nothing special. Thank you. Thank you. Organizers. Well,
thank you. Bye-bye.
Thank you. Bye.
Okay, ladies and gentlemen, welcome back to Shift Money 2020, and we are now about to announce the winner, the number one winner of the Elevator Lab Challenge Finals. Earlier on this morning, we listened to three big ideas who were local winners of the challenge, and now, very shortly, we will find out who walks away winner of this competition. And what's at stake? Very simply, €5,000 cash, €5,000 cash, but maybe more importantly, a chance to implement their idea, their innovation into Raiffeisen Banks Group's system, which actually reaches out to more than 1.7 million clients, and also lots of conversations and media coverage as well. A chance to pitch their idea at the Elevator Lab Demo Day 2021 as well. So lots more than just the money here to win at stake. Right, let me introduce back on stage, gentlemen, one of the jury members who decided who the lucky winner of the three actually is. From Raiffeisen Bank Croatia, Marko Ladica. Marko, join me back on stage.
Hi, Peter.
Hi. So I imagine it was quite a tough decision to make. Three great ideas, but you had to choose one of them. You came together, you debated. What did you feel about what you heard?
It was a really good presentation, and the pitches that we heard today from all of the three contestants. And as you have said, it was a really tough decision because we were going through all of the potential scenarios, all of the criterias, and so to see how will this solution fit into the market, what is the potential, what is the, let's say, overall use cases that are possible into the Raiffeisen Bank community. And we were really struggling with the decision.
I bet.
But finally, after, let's say, half an hour of deliberation and of talking to seeing which one is the winner of the Elevator Lab Challenge for this year, I should not wait any longer.
Yeah, just in fact, again, the great thing about this competition is it isn't just a startup winning some money and then using that to fund their idea, but all the other benefits as well. Tell us a little bit more about that.
Of course, yeah. As you have mentioned previously, besides the winning the cash prizes, also there is a potential for the presentation at the International Elevator Lab Demo Day, but also the potential of the cooperation between the Raiffeisen Bank and the chosen winner. And I should say definitely that all of the top three contestants today are winners, because we'll all get in touch with them to see if there is a potential cooperation with our Raiffeisen Bank and with them, but also one can be named winner.
Absolutely. So, I mean, I imagine maybe all three of these ideas that we heard today, in the future, in the coming years, we might actually, as users, be using their idea.
Of course, we should see what the time tells, but let's not wait any longer. The winner of this year's Elevator Lab Challenge is IPification.
IPification, well done. Congratulations. You are the winner.
Congratulations.
You are the winner of the Elevator Lab Challenge Finals 2020 this year. I think we are straight over to the winner. There we are. How does it feel? How does it feel to be a winner?
The party is already starting in the office. You know, we just try to keep the social distance. Anyway, what to say? I mean, we are delighted. It's such a great feeling, you know, to be recognized by one of the leading bank in the region, and we are looking forward to have a chance to work together with Raiffeisen Bank and hopefully implement this solution across the whole group and help to protect the customers in the first place, and yeah, make their user experience, you know, the best it can get on mobile.
Fantastic. And just before you go, tell us, how are you going to celebrate this evening?
Well, that's a good question, because everything shut down after 5 p.m. So I think we have to do celebration a little bit earlier.
Well, you can do it on Zoom.
We already thought about the lunchtime celebration, etc. here in the office.
Once again, congratulations. Well done for walking away a winner of this year's competition. And we'll be keenly looking forward and out in the media as well to see your progress and how this unfolds for you and your team as well.
Thanks a
Thank
lot.
you
It's
so
been a
much.
great pleasure to be part of this competition.
Fantastic.
Thank you.
So much. Okay, ladies and gentlemen, that wraps up the Elevator Lab Challenge finals for this year. And again, this would not be possible, certainly without all the partners involved, all the people behind the scenes that are supporting the idea, that are nurturing the startups and have offered their support as well. So remember, we have Raiffeisen Bank, Bosnia and Herzegovina, Serbia and Croatia. Raiffeisen Bank International as well, naturally. The Shift Money team here who collaborated with the finals as well. Started in Serbia, Hub 385 and Hub 3887. So thank you so much, and we look forward to hopefully doing all of this all over again next year, 2021. Ladies and gentlemen, welcome back to Shift 2020 in partnership with the Singapore FinTech Festival. And as we're already throughout the day, we've had quite a lot of great content, all to do with FinTech, all to do with future of payments, lending, insurance, you name it, pretty much we've covered it. And we're going to move on right now to another session full of value for you right away. And again, listen, if you are beaming in to us, wherever you're beaming in to us from, we would love to know where you are. We're here on a stage in Zagreb in Croatia. We want to know where you are. Where are you? What part of the world are you beaming in to us from? And pop that in the chat in YouTube or any of the other live streams that you're looking in from. Right, let's move on to our next session. Now, COVID-19, again, I don't really need to share with you too much about the effects of really how it's affected all of us in any country, in pretty much across all industries as well. So consumer behavior, it's all changing. These are trends, increasing systematic fragility, fast implementation of digital ideas and digital tech. So these are just some of the trends that we really need to adapt to over the next 12 to 18 months. But the question is, how do we do it? How do we do it? How do we start? And where are we going from here? The next man on stage, he's going to answer that question for you and give his own personal vision on how everything is going to unfold. Ladies and gentlemen, please welcome to the stage CEO of Iraklum, Mr. Vuk Vukovic.
Hi everyone, thanks for inviting me to this great conference. I'm looking forward to speaking with you. So yeah, a little bit about me. So I'm the CEO of Iraklum, and we're a data science company that builds prediction models, predicting stuff from elections to consumer demand. Very successful at predicting both the Brexit, Trump election, and the Biden election most recently. I did my PhD at Oxford, and ever since I have this company. And I'll show you a little bit of what we did during the COVID pandemic in terms of trying to figure out how things are going to look like and where we're going to go and where we're going to end up with, what are we going to end up with over the next year. So what we built initially is something that we call the Fear Reaction Index, where we were basically, we compiled it from an EU-wide survey that we did, plus some key leading economic indicators and the virus spread estimates to basically figure out, to measure this element of fear, which was significant at the time for the economy, especially in March. As you can see, that the whole thing spiked in March, went down a little bit, but it's still slightly going up over the last few months, which is again a consequence of the number of cases going up. So the problem that we're facing as an economy right now, on one hand, there's fear of losing your job and losing your income and whatever, and on the other hand, there's the fear from the virus itself, right? So these two elements are basically combining the factor into one of these index factors. So back in April, in early April, we conducted a survey, the first time with about 6,000 people, asking them, how is COVID going to affect your behavior, right? And what we noticed is that a lot of people, almost 2/3, said that it's going to affect their behavior in the long run, so that they're going to change some of their behavioral patterns in the long run, right? The reason why was, the possibility of catching the virus, following government measures, etc. And then we asked them basically, how do you think this will affect other people, and what would other people do? Because this is kind of the basis of our approach. We ask people not only what they think, but also what other people are going to do in addition to what they think. And the predictions basically were that a lot of people are going to keep maintaining physical distances, so no handshakes, washing hands, that sort of thing, but also avoiding crowds in places and going to the same places but less frequently. All of this basically affecting demand, right? So even back then, why am I saying this? Because back then in April, we already figured out that what was going to happen with the economy is not a quick V-shaped recovery as a lot of people were predicting back then. We were saying that the economy is very likely to go for a very U-shaped or L-shaped recovery, meaning that it's going to take a while before things come back to normal, right? Simply because of the impact of the virus and because of the behavioral reaction that people had to the threat of the virus, right? Hence the element of fear, which I mentioned initially. And to verify this, we were using Google mobility data, right? So we had luck that Google was publishing their mobility data for a lot of countries in the world. So we were basically trying to see whether or not our predictions would materialize in a sense that people will actually react differently and adjust their behavior. So what I'm showing here, I'll show you 4 different graphs for the selected 5 countries. These are first for the European countries, then I'll focus on the Southeast Europe. So this is the first one is for retail and recreation. So this is people going outside for buying stuff or simply for recreation. And you can see the huge decline during the lockdown, almost, so this is March and April, almost 80%, 90% decline of mobility. So people staying at home, not moving, not going outside. Varies between countries, so in Germany it was a little bit less. And then the recovery, it was not really V-shaped, it was slightly slower, but more profound in this, sorry, faster with the retail and recreation part, a little bit slower with the grocery and pharmacy stores. But what we can see again today, over the last few months, again a decline of mobility in these selected 5 European countries. This is the effect of the second lockdown, right? So people again reducing their mobility, which consequently affects demand, and it affects what people are doing, how they're spending their money. I'll show you all of this. Their mobility in terms of travel and workplace mobility, and now it's back to almost, well, not as low as it were during the first lockdown, but there's still an effect of about 25 to 50% decline in transit, and about 15 to 40% decline in workplace mobility. So to translate this into regular terms, people are not going back to work as much as they did before, right? Meaning that they're simply not spending, right? So if you're not going to work, you're not going to the same restaurants, you're not going to the same places, avoiding physical contact, avoiding crowded places, avoiding transportation, avoiding any kind of transportation, which is affecting your spending patterns. And these spending patterns obviously affect demand, which is why we're going to have a very longer economic recovery than most people anticipated in the beginning. So I just wanted to briefly touch upon this. This is what we were measuring it back in April. We were looking at the effect of the lockdown and the reduced mobility on the spread of the virus, and there is a significant effect of the lockdown itself on the doubling rates of the virus. But what's interesting here in this part, so we were looking at this for all 28 EU countries, and notice basically that, all countries, regardless of what their response was, different countries had different responses. So for example, Sweden was back then being portrayed as a kind of a different response strategy, but even Sweden had about 40 to 50% decline of mobility, right? So even people in Sweden, despite the fact that the government didn't lock down the economy, were saying, I'm reacting to this by not going outside, not mingling, and staying at home, right? So you didn't even need that strict governmental lockdown effect for the people to react in this way, again, bringing us to the first point that I made on fear, right? So when afraid, people are reacting in a way, when afraid of the virus, when afraid of the threat of the virus, people are reacting, and it's having a negative impact on the economy, right? So the point is, even without a strict lockdown, you would still have a significant decline of economic activity, and you can basically see this in the GDP data for most of these countries, which are going to go for a very long recovery period. And this is even more interesting we did it for 50 US states. Again, different approaches, different states had different approaches, but they almost had an identical decrease in mobility, right? About 50% decline in mobility. So regardless if it were Texas or California, so people reacted in the same way, regardless of what the governments told them. So we used some of this data to predict death rates in the United States. This was done for a client. We were unfortunately very accurate here, 98% accuracy. We predicted about 200,000 deaths by the end of September, which is kind of very close to what happened. But what we were also measuring is this effect. We were tracking changes in the spending patterns, what I mentioned, right? Again, looking at the mobility, this, for example, this red line is the mobility in restaurants, right? So restaurants being shut down, 100% decline in mobility. But the upper graph is actually more interesting. It tells you about the structure of spending and how it reacted to the whole lockdown effect. So notice, for example, remember that people were saying, yeah, it's a lockdown, but I'm still using my credit card, I'm still spending money, right? Well, the initial effect in March and April, notice there was a 35% decline of spending. This is credit card spending, right? So the fact that you were locked down, yeah, you could spend money on Amazon or any other online retail and buying stuff but still your spending went down significantly, simply because you were not outside and purchasing all the same items you do when you're walking around freely. And the effect, which is interesting, even more interesting, is divergent in terms of different incomes, right? So the blue line are high incomes, the green line are low incomes. So notice that for low incomes, spending is basically after about 4 or 5 months is back where it was before the pandemic. But for high spenders, it's still about 10 to 15% lower than it was before the pandemic, which is, again, a significant drag on domestic demand, right? Because high spenders, people with high incomes, are the ones spending spending the largest amount of money, and their spending is still basically 15% lower than it was before, right? So this is the element of demand that we're talking about, right? So some of the businesses are closed, people are not mobile, some of them are again back home, and they're not spending, and this is the effect we can especially see in the differences in incomes. The consequence of this, the negative consequences first, is going to be a significant decline of GDP this year. These are projections for Europe, ranging from about 6% decline to a 12% decline, depending on which country. And this is going to cause all sorts of problems, all sorts of other consequential problems. So we're going to have an increase in unemployment. The expected increase is from about 6.7 to about 9% on average in Europe. We're going to have a worsened fiscal situation. So this graph is a bit too much, but I just wanted to show you basically that a lot of countries in Europe still haven't recovered from the sovereign debt crisis that we had in from 2012 to 2015, right? So for example, these countries, so Spain, France, Romania, United Kingdom, Hungary, all of them are still having consequences from that crisis, still large deficits, large budget deficits, and now you have a significant fiscal shock that's going to cause another strain on demand, and it's going to worsen your fiscal situation. The implication of this, and the fact that we're expecting budget deficits to be in the EU average of about 8% of GDP, the potential consequence of this is, again, the rise of the austerity debate, right? Not this year, maybe not even next year, but from 2022 onwards, we're again going to have this debate among the economists, and that's one sure prediction. Same thing for public debt, right? So from an average of 86%, which is again large, again the consequence of the sovereign debt crisis and what we had from the previous financial crisis, and now it's going to be even higher, about 102% in the euro area countries. But there's also positive COVID consequences, right? A lot of companies are switching online. Right? So you can see here, this is a research by McKinsey, so not our own, and they've shown that globally about 58% of companies notice that customer interactions have turned completely digital, going from about 41% in I think this was in 2019. And then the same thing, 55% of products are also turning digitals, right? And companies are responding to changes much more quickly than they basically thought it was possible. This is something that people ask managers. So how fast did we respond? They responded in about 2 or 3 months, whereas previously managers thought that this digital transition is going to take years, definitely not a few months from what it took. So basically, yeah, COVID was one of the biggest digital transformations in work, right? In terms of remote work, demand for online services, operations, etc. So some of these changes, they were asking people how many of these changes do you expect to persist in the long run. About 62% think that customers' needs and preferences are going to stay focused on digital products, which is expected, right? So people are now getting used to everything being digital orders online, product shipping, etc. And 54%, this is very interesting, think that remote work is going to continue even after the pandemic. A lot of companies are thinking about this. They're introducing, just a few days at work. You come to work only a few days a week instead of the full 5-day week. You can work 1 or 2 days from home after the whole thing passes. Right now, again, a lot of people doing remote work. Interestingly, about 23% think this will not continue, but this obviously varies by industry, right? In some industries, you actually have to be present at work. For other industries, like anything that's online, you can basically do it from home. And this is, apparently, a lot of it will stick and change basically working patterns. Also, what they noticed is that investing in experimentation with digital technology, so if you were implementing new solutions, new digital solutions that you never thought you were going to do before, this helped companies significantly to navigate through the crisis. In terms of the economy, what we're experiencing is something that economists call a K-shaped recovery. So K-shaped recovery is simply that some industries, after the decline, some industries are going up significantly. This is obviously tech, right? To some extent retail and obviously software services, whereas other companies are either stagnating or going down, other industries, right? Industries like travel, entertainment, hospitality, some food services, and especially small and medium-sized businesses, right? So because they're the ones with the layoffs, they're the ones with the huge declines, with revenue declines of 80 to 90%, and they're the ones that are dependent on government subsidies, right? So a lot of them will go under. These bankruptcies could worsen the situation with banks. So the K-shaped recovery is basically threatening the sustainability of at least one part of the economy, whereas the other part is doing really, really well. Now, because of this, you had the stock market effect, and the stock market effect was primarily driven by these companies, okay, tech, software, which is why you've seen a huge V-shaped recovery on the markets, but it hasn't happened in the real economy. And this is something that economists always like to say: the market and the economy are not the same thing, right? They can be proxies of one another, but they're not the same thing. We need to keep this in mind. Another positive effect, well, not of COVID, but the positive effect of post-COVID, is the vaccine expectations. It's supposed to close the, well, at least it's anticipated it's going to close the K gap. You can see that basically immediately after the vaccines were announced, this was after the US election, 1 week after the US elections, travel, airline, biotech, pharma industries all went up, whereas video communications, home fitness, and streaming companies, all of their stocks went down, and you can basically see the same effect. The S&P 500 versus the Nasdaq. The Nasdaq is a tech index. It had a much more significant decline after the announcement of the vaccine, right? So the tech companies basically are now stagnating a little bit, but again, there's a question of how long this will last. Okay, finally, I wanted to briefly walk you through what's happening in this region, in the Croatia and the Southeastern European region. And I'm going to start again with the mobility data. So we also basically made the same predictions for Croatia in this region, and you can essentially see that the trends are very similar to the ones in Western Europe, except all of our countries, so countries in this region, are still in a decline in terms of mobility. So remember, in the Western European countries are slightly rebounding in terms of mobility for retail and recreation and grocery, whereas these countries in the region are still experiencing decline, about 40% on average for retail and recreation, and about 10% on average for groceries, except for Slovenia, which has a very particular case. Slovenia is back almost to the first lockdown levels of lower mobility, which is going to cause a significant impact on their aggregate demand. Same thing, same trends in transit and workplace mobility. Again, Slovenia the outlier, but most of these countries falling for about 35% in terms of transit and about 25 to 30% in terms of workplace mobility. Also notice that none of these countries' workplace mobility came back to its pre-pandemic levels. Okay, so about 10%, this is again the summer season, but again, basically not returning to that level. So a lot of people still working from home. Again, especially the people with high incomes, which is affecting demand. Notice also one more thing. So in terms of transit, Croatia had a spike here, and in terms of retail and recreation as well. This is Croatia because of the tourism season, obviously. So that's the effect that we can also notice. When we did this in these countries in the region, we did it in June. We were asking them, do you expect a second wave? A lot of people agreed, and they were also agreeing, over 70% agreed that the economy is going to take more than 2 years to recover, which is something that we will again surely be seeing. Similar responses in this perspective. In terms of the GDP decline, expecting about a 10%, 11% decline. This is an average forecast, consensus forecast from the European Commission, the government, the IMF, etc. But the problem is it's probably going to be even worse. This is just for Croatia, because our tourism impact is about 7 to 8 percentage point of GDP, just the decline of tourism, which was going to finish in between 50 to 60%, 50 to 60% decline from last year. There's also an expected decline in export. Croatia is a very export-driven economy. At least in the last decade, it was an export-driven economy. Exports are expected to go down by 30%. And then, there's the possibility of upcoming job losses once the government measures basically expire. In terms of unemployment expectations, this is one interesting graph. I just wanted to show you basically that for Croatia, because we're a tourist country, usually the biggest amount of job creation in Croatia is done in March, April, and May in every year. This is a comparison of the seasonal numbers for employments for 2017, 18, 19, and now in 2020. And this is what happened during the lockdown. So instead of creating jobs, we were losing jobs during these months. Then going back to our, to the same trajectory as before. But this loss of jobs was never basically, so there wasn't a huge spike back to get these people back to work, which is why we have increased unemployment. The problem is that, whether or not this is going to increase in the months to come, we'll see. It all depends on, the government responses and how many businesses will announce their unfortunate closure if it happens. Same thing with fiscal deficit. So we're expecting about a 10% deficit this year. This is official government estimates, about 7% next year. And we're expecting a huge rise in debt to GDP ratios, again, going from 73%, which was a kind of a good trend, a decent trend before the crisis, but it's now going to go up to about 90% of debt to GDP. Again, something that's going to cause problems in the long run, right? So we're expecting to see these problems happening in the long run. Comparing Croatia and other countries in Europe, so we're kind of in the upper middle rank, but comparing it to transitional economies, we were, even this is before the pandemic, right? We were basically number one in terms of debt to GDP, which is again going to cause significant problems in the years to come. Another thing not to look forward to, this is the situation with bond maturities. What this means is that Croatia is expected to pay out a lot of bonds a lot of debt that we incurred in the past, and it's going to come to us in the next few years, so 2021, 22, 23. So again, expect significant fiscal constraints in these years. For now, this is fine. We still have a pretty good credit rating. You can see this in the Croatian credit default swaps. A credit default swaps is basically, so if it's 75 basis points, that means it's translated to about 0.75% of interest rates. Okay, so that's like the domestic interest rate for the government, which is pretty decent, which is pretty good right now. And the credit rating is still about BBB minus. I think it was now changed just to BBB. Doesn't matter. So as long basically as these long-term interest rates they drop to zero, they're likely to go up if the fiscal situation worsens significantly. But that's a big if, right? So for Croatia, in this particular perspective, it all depends on what's going to happen with the EU. So if the EU goes for another crisis, the fiscal and sustainability crisis, it's going to happen to Croatia, it's going to happen to the entire region. If not, then we're going to see, then we might just get out of it with less problems that we had in the previous crisis, but that remains to be seen. Okay, so to conclude, as I already mentioned, so the vaccine effect is expected to be, the vaccine is expected to be on the market in 2021. We've already seen this effect on the stock markets, which are probably going to continue to go up, and it's going to have large positive psychological effects, even if the majority of the population doesn't actually, get a vaccine, right? But it's still going to have a strong psychological effect, and it's going to at least stop the whole lockdown situation and enable the economy to start rebuilding. And this is going to happen worldwide, so it's a positive thing to look forward to. However, until then, we're still facing, so in the next 6 months, with some uncertainty in terms of the change of behavior that affects aggregate demand. So what I mentioned before, so remember, mobility still going down, and this effect of decreasing mobility is going to have an impact on demand. And we can also expect, unfortunately, increases of unemployment due to firm bankruptcies. And if firm bankruptcies continue, then this is going to cause a strain on banks as well. There's been discouraging signs from the ECB that they're expecting, they're preparing a lot of stress test scenarios, seeing what's going to happen if a lot of banks start going under, so we need to adapt basically to the situation. They currently have enough firepower to fight it, to deal with it, but it's going to be, it's not going to have such a positive economic effect in the end. And there's also, as I already mentioned, imminent fiscal problems with debts and deficits. In the medium and long term, austerity debate is going to be back in 2022, which is going to increase systemic fragility from that point on. There could be a situation that's throughout Europe that's going to be similar to 2012, 2013, where some countries are basically undergoing a series of changes and calls for structural reforms, like what happened with the countries of the European South. Remember Italy, Portugal, Greece, Spain, etc. We could have a similar situation then. In this case, and Croatia could be in the same group. So we're basically expecting for people will be calling for reforms. Whether or not reforms will happen is a different issue. And finally, we're expecting basically these long-term changes in how firms will do business, which is again a positive sign. This is going to lower the levels of fragility in the economy, so companies adapting to working from home, a further rise of the IT sector, and consumer patterns being different, and companies which are adapting to these patterns are surviving. Companies that are not adapting to these patterns are dying out, and that's the effect. And that's the effect basically of every crisis. Okay, thank you very much. I enjoyed my time here. I hope you enjoyed the presentation, and that's it for me. Thank you.
Okay, we're back again with more of Shift Money 2020, and our last speaker, some fascinating insights about how Croatia has been dealing with with what's been going on financially, economically as well, and really almost like jumping into or looking through a crystal ball, trying to understand and navigate what will happen based on data in the past. So a great speech there from Vukovic. Right, we move on now to another session, and this is all about a story from 0 right the way up to 1 million users. Now, if anybody asks me how to do that, I'm not sure how I would do it. I'm sure some of you listening might have a few ideas, but we're going to hear from a gentleman now who's going to tell us his story, how he did it, and a few ideas, perhaps insights that might actually help you to do the same thing. Ladies and gentlemen, welcome to the stage the founder of Cryptomat, Mr. Srđan Mahmutovic.
Good afternoon, everyone. Welcome to another session of Chiefs Money 2020. Another remote session due to the unforeseen circumstances that we have all found each other in this very particular year. This session is entitled From 0 to 1 Million Users, and then how to build and keep building crypto businesses. Our distinguished guest and speaker for this session is Mr. Srđan Mahmutovic, one of the co-founders of Cryptomat. Welcome, Srđan.
Hello, hello. Nice to be here.
Last year, we were in Zagreb. We were on a stage together. We talked a lot about crypto. We talked a lot about regulation. We talked a lot about future. And now, unfortunately, we have to do this via video link. But it's good to have you here, and it's good to talk to you.
Yeah, look, it is what it is. I would also like to see you in Zagreb in person, and that would be awesome. But you know, we have to live with what we have. So, but let's try to make the best of it, and you know, let's just work hard and move things forward, and you know, just get over this.
Srđan, I know Cryptomat is a very decentralized business by its definition in many ways. You guys started out of Ljubljana, but now you have people working all around Europe for you. And you recently, you told me, even moved to Estonia. Where are you now at the moment?
Well, currently I'm in Ljubljana in a lockdown. But yeah, as you said, basically, when we started the business, it was important for us to find a jurisdiction that on one hand is startup friendly, but on the other hand also has some sort of regulatory framework. And Estonia was really the best solution for us. And I strongly believe that the Estonian environment is really great for us as a startup. We can get so many connections from there. You can see unicorns coming out of Estonia. So I should want to follow that path as well. But yeah, the moment we can, the team, as you said, is distributed all around Europe. And that's actually one of our advantages and also one of our key goals and strategies as a company, basically, is to bring the service into every household in Europe. And basically, we believe that, crypto belongs to everyone, not just to the privileged few. And so it has to be available to everyone at the same terms. And for that reason, our service is translated into all, if not most, if not all European languages. Because if you're dealing with money or finance in any way, you need to understand what you're doing. So that's really important to us, essentially. But yeah, so I'm in Ljubljana at the moment. It's a snowy day today.
Winter is coming in so many ways, but interesting. Tell us a bit more about the evolution of Cryptomat. You guys have a very particular story. You grow to a very large number of customers, and obviously you plan to continue growing. But then you also have had no outside investment so far, which is very unique in this world that we live in.
You mean we had no ICOs or nothing like that?
Yeah. Or ICOs and all that stuff.
You know what? Actually, that's quite fascinating, to be honest, because we started from scratch, from zero. We had no experience in the fintech industry as a team, but what we did is, or one of our advantages basically is that, we've developed products, and me personally as an entrepreneur, I've, built businesses before. So this is not my first business. And the team that we have is so amazing that we can basically build any product you can imagine. And that was a good start, right? Being able to build products. But so we approached it as a traditional business in the sense that, we need to make revenue to survive and not depend on outside funding. That's core. That's what business is about, right? End of the day, making that revenue and hitting those numbers. Initially, we built a platform, and it was kind of slow, to tell you honest. And we were really looking for for that holy grail in how to acquire new users. And at the time, we were really thinking, okay, what to do. We had no budget, and so the only thing we could do is just do the daily grind. Find different ways to approach users, to approach different communities. We did a couple of really interesting campaigns. One of the most, initially when we launched the service, we started off with collaborating with different coins and different projects, basically helping them or helping each other by telling our customers what they are about, and they would talk about us to their communities. So by joining forces, we would kind of get access to some of the communities that didn't know about us before. Another really huge thing that we did in terms of our recognition is basically we went into a partnership with a project called the Engine, and they deal with NFTs. They're more kind of into games, well, gaming, not gambling, but into games and NFTs and that sort of thing. And they're building a whole ecosystem where game devs and game players can really utilize the blockchain in such amazing ways. And so we partnered up with them and basically built the first blockchain-based reward system. And that was a thing, so many people were interested in it. We were also published on Finance Yahoo section, finance section on Yahoo. So we got a lot of positive feedback with that. A lot of people found out about us. And then we started doing giveaways or contests where we would actually partner up with game devs who would integrate our NFTs into their games so that these NFTs basically had more intrinsic value. And that was something interesting. Maybe it was too early to tell you honestly in terms of really reaching the mass market with this approach. However, I feel that we reached those people who actually tell other people about crypto. So it's like tech savvy people and people who play games or are into tech and into NFTs and so on would then know about us. And when they were asked by their friends, where should I buy crypto, they would most likely recommend us because we're so easy to use and
UX is everything.
Yeah,
you should probably have some lectures at uni and a business school about customer acquisition. I think that's always something. I know businesses, crypto or not crypto, are spending a lot of money, and it's always this it's always this figure, like how much do you spend per customer acquired? And I think you guys did a very good job there. So this is something that, how many, by the way, speaking of users, how many users do you have now? And what is your projection going to look like in a year or two?
Well, we're currently closing into 100,000 users. Our goal is to reach 1 million users by end of 2022. And basically, I think the way things are speeding up, I think that's gonna that's a realistic plan. And we're basically finalizing our round of. You mentioned that we didn't get any investment or financing. Well, we're now actually finalizing a round of VC investment, and yeah, I think that's going to really speed up our growth and things like that. So, even on we started hiring a lot. I have to tell you. So maybe if someone's watching interested in working in a crypto company, check out our jobs section on the website. Little promo there.
I mean, more and more people that I know from a lot of friends of mine and a lot of people I know from the industry that worked in, let's call it traditional finance, in banks and even major fintech startups, like let's say traditional finance technology startups, are joining different types of crypto. Either a hedge fund or another exchange or a startup. So it's very interesting to see these trends. Of course, these trends are slightly following the price of Bitcoin, but not only, like more and more people are going in, right?
Yeah, I know what you're saying. So you're saying like, okay, whenever Bitcoin goes up, people get excited about it and they're like, yeah, I want to be in crypto. But yeah, but on the other hand, there's people, well, not just people like me or, people that I work with, but there's also, as you said, people coming from the traditional finance sector into these sort of businesses. And actually, I have to tell you, we need them, especially in terms of compliance, regulatory requirements, dealing with banks, because end of the day, there's this huge gap that we need to close between the traditional banking, finances and finance, well, in general, and the neo-finance that we see today. And, I'm sure you saw the news on that PayPal in relation to crypto. So, and just like, that 2 years ago, that was the opposite, diagonally opposite. So today we're actually getting there. And many of these companies, I think, will actually become the new type of banks, which, people in their 20s might know as their primary banks, or people in their younger people, teens, might find these companies to be their first banks.
Interesting point. But I want to, based on what you said, I want to open a lot of directions of what we're going to talk about. I think we're going to run out of time at some point.
Yeah.
But the question is, you mentioned regulation, you mentioned Europe, it being basically a pan-European company. All your users in Europe, is this a KYC requirement?
Yes. No, it's like this. We consciously decided that we want to serve Europe.
Is that the European Union or the continent? Or?
Actually, it's the European Union, but we do serve some European countries that don't fall within the.
Do you serve some of the countries that recently left the European Union?
Well, yeah, like that.
Okay.
Like that. But then you also, yeah, exactly. So we plan to serve. Initially, our goal is basically just to serve the European Union, of course, alongside UK. And we didn't want to stretch too wide and try to cover, Asia and Latin America, which might, seem really popular and an interesting thing to do. But we actually want to have a strong foothold in Europe and want to become one of the go-to places for crypto. Not just to buy or sell crypto, but basically to manage your wealth, to earn an interest, to do other things that crypto will allow us to do in the following years. We want to be that place in Europe by 2025. And what this means is, what we believe is we need to focus on Europe, and especially with, Europe, by the way, is also quite a difficult market if you think of it. Many US companies have tried, entering EU markets, but end of the day, it's different cultures, different languages. It's much more different than, let's say, more or less, I don't want to say unified culture in the USA nowadays, but you know what I'm saying, right? It's one market, whereas here we have multiple markets. And so, yeah.
We mentioned a little bit on regulation and compliance as well. And I know this is a huge aspect for any financial and fintech business. And, especially crypto business. What would you estimate what percentage of your time and your company's time goes on, you spend on basically managing and handling regulators, working with regulators, and complying with all the rules?
Yeah, look, that's a whole topic. We could talk about whole day. But when I started this business, I was not aware that we're going to have to be dealing that much with this subject. But in fact, I can kind of say that we deal maybe about 30 to 40% of our work, in fact, is basically connected to regulation, being compliant and so on, but also working with law enforcement and also trying to prevent fraud. So as a company, we're working with, on one hand, with law enforcement and on preventing fraud. And on the other side, we're working with the regulators basically to stay compliant, to understand what we as a company are supposed to do to stay compliant. So there's actually some good news coming up in the future in this aspect of the regulation, and that's the crypto MiTA regulation that's going to be. I'm not sure if it's going to take place in 2 years or if it's going to be released, the regulation, if it's going to be launched or whatever in 2 years. But the regulatory framework is most definitely coming to us, and that's good news because it's going to unify how the European states actually treat crypto as an asset or as a business, and it's going to allow us to passport our licenses to different EU countries. So
like it's happening with banking in the EU right now, right?
Sorry?
Like it's happening with banking and other financial services in the EU right now, right?
Yeah, exactly. You basically get a banking license somewhere, I don't know, in Ireland or Lithuania or whatever, and you might then use that same license in a different EU country just by registering with the local regulator. With crypto, these things are kind of an unknown, and because of that, when you approach banking partners, payment providers, and so on, it's kind of a game of getting to know each other and understanding each other's businesses, understanding the risk involved, and it's just a whole different game. If we had a framework in place, things would be easier, rules would be set, rules would be known, and banks and banking partners would, I guess, work with us in a much simpler way than they do today. But yeah, if I look at things 2 years ago, they were much, much worse than they are today, to tell you honestly. But there's with the influx of new users into crypto, the regulation is really important, not just to bother users, but basically to protect them as well. So that's one of our key goals and in our strategy, basically to try and protect the end user from scam, fraud, that sort of thing, but also to help them store their crypto and manage their cryptocurrencies in a safe environment, in a cool platform such as ours.
Yeah. I mean, regulation really, really is important in finance, and people forget this. I always say, yes, regulators always, have to do their job, and they definitely don't have an easy job, I think, because they have this balance where they need to support businesses and help businesses, but then they also have to protect consumers. So hopefully, but as you said, I'm good. I'm very happy to know that in Europe as well, these things are moving really fast, and the regulators are doing their homework, right? And as crypto is moving forward. Let's talk a bit more about your product. You started, you said, as an exchange, and that's pretty straightforward. I'd say if someone is not really versed in crypto, you can relatively easily explain to them what a crypto exchange does. But what about now, and especially what about how do you see which interesting, and let's call them geeky products, are you going to looking to move into in the next year or two, perhaps?
Well, today Cryptomat is is basically a crypto exchange where anyone can buy and sell cryptocurrencies, but they can also store them and hold them in a integrated wallet. We support most large caps, and we're soon going to be adding even more coins and tokens to the platform. Specifically,
now, by the way.
Sorry?
How many do you have now? How many tokens and coins?
We have 30 plus tokens on the platform.
Mm-hmm.
And initially the focus was on really, just establishing or setting up the fiat gateway, the so-called fiat gateway platform, which means that you can buy crypto with euro using your credit card or via bank transfer. Or in some countries, we have different payment methods that might be popular in those countries. We soon plan on releasing different fiat currencies to the platform. So, for example, you might make a deposit in Croatian kuna, or you might make a deposit in Hungarian forint as well. So why this is really important for us, because it's another step in bringing the whole project closer to the local market, and being really hyper local. So this was first that was setting up the exchange, and the ability to buy and own crypto was step number one. Step number two is we just recently released a savings account, which is basically an analogy to what people know from banks when they used to get an interest rate when they made a deposit in the bank. Now such a thing is also possible with crypto. We know that we have staking, we have lending and borrowing, and that sort of thing. But what we did is people can actually now have a savings account on Cryptomat and earn an interest rate just by holding their crypto on the platform. But moving on, I see decentralized finance projects evolving. We're actually following the innovation, and we're actually on the frontier of innovation. So we know what's happening, but not everything that is being developed and that comes our way is really suitable for retail markets. So the savings accounts, borrowing, stake, lending, that sort of thing might be, but I don't think we're quite there yet with the lending and the borrowing, but we are with the staking in our view. Mm-hmm. We might see NFTs explode, and we will follow that. And once we find an awesome utility, we are going to support that. So we see ourselves as a crypto platform that's going to evolve. Today we are a fiat gateway. Tomorrow we are a decentralized finance crypto platform, basically. And the day after that, we're a neobank. Who knows? Yeah.
That's a good way to go. You said we talked about products, we talked about compliance as well. Let's talk a little bit about the company itself. You said you are very decentralized. You moved to Estonia as well for various reasons, among others. But then this is almost like a culture that you wanna harbor in Cryptomat, right? Like a pan-European thing. You wanna be present everywhere, also physically. How many people does Cryptomat have now? And you said you're hiring a lot, right? You're trying to hire now.
Yeah. So at the moment we have about 30 people in the team, but we are hiring for an additional 10 different roles at this moment. The team being distributed across Europe. So our, especially with this COVID situation that we see today, actually this does not affect how we work as a company at all. Mm-hmm. Of course it does, locally it affects everyone. Maybe I didn't put it correctly. It does affect everyone, but the operation wise, we're a remote first company. So We have people we work with from, of course, from Estonia to Romania to UK, France, Spain, all over Serbia, Turkey, all over the place. And I think that's actually that is the as I see it, the EU, the point, I mean, and the philosophy of why the EU was created, in my view, so that we can actually work across with our peers and colleagues from different EU states and basically build businesses and become, competitive to be competitive with, to the US companies and, even South Asian or even Chinese companies. So it's really important. And also what this does, it brings a lot of diversity into the company, a lot of different views. And that's really important because, if you're just confined to one different, to a single country in the EU, you might, kind of be biased towards some things. But when we have team members distributed across Europe, this really does bring a lot of value. And with the tools that are available today to communicate online and work and collaborate online, I see no issue why we wouldn't do that. And also it's safe. So yeah, it fits the agenda.
Also, good luck on that. And I'm sure you guys are going to succeed in actually having this. I like the word also pan-European approach, and I think Europe is pretty small. Like 2 time zones covers or 3 time zones cover all of Europe, so you can easily, you don't have these issues like when you work across Asia when it's like 6 or 7 hours, or even from one continent to the other. One other point that we can't really escape from, and you mentioned COVID, which was a great segue to my next question, and it's very interesting to see from operation standpoint that it doesn't affect you in terms of managing your day-to-day business. But how did it affect your user numbers and your traffic numbers?
You know what?
In the last 6 to 9 months?
Yeah, this is interesting. I mean, we didn't notice. I mean, actually, I cannot find a correlation between COVID and our revenues. I don't think it's really related. Our revenues usually grow when things are moving on crypto markets, when there's news on the crypto markets, when PayPal enters, the crypto scene, that sort of thing. And there were a lot of, media covered mostly, COVID, covered, the elections, the protests, that sort of thing, and and crypto got much less coverage. So I would actually say that people now, like a regular person nowadays, doesn't even know the price of Bitcoin or doesn't follow that. So actually, if there was no COVID, I actually think we would maybe do even more because the media would report more on it. But still, the growth has really been amazing for us, and maybe there's an opposite story that does in fact mean that we grew because of COVID somehow. But yeah, I mean, COVID has affected some of our team members were positive as well. I mean, looking at it on the personal level, but luckily none of the team members have any consequences or anything like that. So I'm really happy about that. But yeah, I hope that COVID won't affect us. Actually, as you kind of suggest, I think we will actually grow even more because it's much more focused into digital than ever before, basically in the history of humankind, right? So I see things moving up, especially when the local markets realize that, things are moving with Bitcoin, they will find us. And we're usually one of the best services locally all around Europe. So yeah, I see positive things in the future.
What I understood from what you said is that your business, at least in terms of numbers, is more affected probably by the US election than by COVID and the whole lockdown in terms of...
I didn't want to say it, but actually it's exactly that. There was so much coverage about this election and,
uncertainty. And you're right. And I asked this question because I know, for example, in the US, especially and in Europe, retail trading has gone through the roof because people were at home and they were like they were playing with their phones, and then suddenly they have this great UX tools, and I can buy some shares of Google. That's so cool, and especially if you bought, I don't know, Tesla, whatever, and now you see like a 400% increase, and same of course goes for crypto. If you played with it 3 or 4 months ago. We're running out of time, Srdjan. I have one interesting question for you, maybe for people that are not so versed in crypto that are watching this. If I am a young, let's say professional, you're like a 30, 40-year-old lawyer, or you work in an insurance company, or you have your own business, a restaurant, and you have some disposable income. How much would you suggest to them of their disposable income should they keep in crypto assets?
You know what? That's actually...
You can say all, by the way, right?
Sorry?
You can say all of it.
Yeah, I mean, look, this is kind of an investment advice question, but I can still answer it, right? I can answer it for me personally, how I think about this, but of course, everyone, should choose for themselves. So personally, I mostly believe in Bitcoin as a storage of value, as kind of a digital gold type of thing, and I see it in the future being exactly that. When it comes to other cryptocurrencies, I really cannot say. It's just pure, it's speculation, and you really need to follow how those projects are evolving and whether they're at their end or they're just beginning and they have potential to grow. But when it comes to how much of your disposable income you should put into crypto, I think the answer to this question is the same as an investment advisor would basically ask the person who is investing, how much money can you basically invest into building your portfolio, whatever that might be, crypto, gold, stocks, real estate. So it's like, I guess, you need to probably put your eggs in multiple baskets so that, they don't break all at the same time if shit hits the fan. Sorry.
No.
So how much to put into crypto is, well, I think it's a personal preference. So yeah.
Yes, of course. Just to make sure, like I didn't want to ask for investment advice for our audience. This was more asking for like a direction of crypto for people to explain where we think the crypto markets could go, and especially for people that maybe they always hear what you said as well: diversify your portfolio, keep your eggs in different, not in one basket, and but people are still kind of catching up. And I think, as you said as well, a point that you made before, the media, it's still, of course, there are huge crypto news platforms now and crypto news media, but then if you watch day-to-day, television and the major newspapers, unless they're business-oriented, you're not going to find much news about that, except here and there an ad. So maybe this will, I think, change a lot in the next.
You know what? Maybe one thing, like if you're not into crypto or investments in general, what I see a common mistake that people make is, they buy some crypto, and because these, they get a crypto app, and then they buy and sell, and they overtrade. So maybe an advice is, if you already go into crypto and you're not a versed trader, then just hold your crypto and relax. Give it some time. So maybe just that.
Indeed that. Srdjan, this was a great talk. Thank you so much. I think we're running out of time. I really truly do hope that we will do this. I have to do this in person next year because I think we're all sick with this. The whole world is in this. We want to get rid of it. We miss the conferences. We miss talking. Yes. We miss talking in person and traveling. Thank you so much. It was a pleasure last year. It's definitely a pleasure this year, and hopefully it will be a pleasure next year in person.
The pleasure is all mine, and I also hope to see you in person soon, and I wish you guys all the best.
Perfect. Thank you.
Bye.
Okay, ladies and gentlemen, we are now ready for a very short break. This is a chance to have something to eat, something to drink, a cup of tea, cup of coffee, and then we will be back here on this stage at 15:45 CET. 15:45 CET for some more Shift Money 2020.
Banks must have an online payment proposition to take control of the payments of their merchants. To do this, banks have the choice to build, buy, or borrow their payment platform. Of course, banks could try to develop software to become a PSP themselves, but this takes a lot of time, money, and knowledge without any guarantee for success. And why build it yourself? We are Magnius, your technology partner in the payment industry. We provide a white label intelligent payment platform, 100% compliant, and continuously up to date with the newest techniques and standards. A safe and scalable solution for banks, acquirers, and PSPs who want to offer their clients a smooth payment process. With Magnius, it is possible to launch your own online payment proposition with global payment products fast and remote, in your own corporate style. Want to know more? Get in touch. We are happy to help.
We dream of a world where everyone has equal opportunity, where one person's will can't be suppressed for another person's gain. A world where your decisions define your destiny. For us, crypto stands for economic justice, personal sovereignty, and social equity. Ideals that we believe should be part of everyday life. That's why we created an easy and enjoyable experience that would allow everyday people to purchase, store, send, and receive cryptocurrencies. Because we believe everybody deserves crypto. So when you see the words everyday crypto for everyday people, we hope they remind you that everybody everywhere deserves freedom, fairness, and fulfillment. Because deep down, that's what we hope to provide at cryptomat.io.
Ladies and gentlemen, welcome back. More Shift Money 2020. It's been an eventful day so far. Lots of great content, lots of great ideas, debates. We've had the Elevator Lab Challenge finals as well. We found out that we listened to 3 fantastic big ideas, cutting-edge ideas in terms of fintech startups within the region. We found out the winner as well. Lots of other great content until now, and we're going to do the same right now with our last session of the day. So this is all about how successful startups are really using Microsoft Azure Modex in the right way. The next gentleman here on stage, he's going to share with you a little bit more about that, and I'm intrigued as much as you are really to find out really what he has to say. So our last session of the day, Senior Product and Program Manager at Microsoft, Mr. Lucas Fox.
Hey, how are you?
All right, so now we are live. Hello, everyone. It's great to see you almost. So in next 25 minutes, I would love to guide you through some, I hope, interesting stories together with my guest. My name is Lucas Fox. I'm leading startup strategy at Microsoft Central Eastern European team. And we are supporting Shift Money to tell you great stories, how startups decided to challenge our clouds, and at the end, how they are using a lot of puzzles to build great solutions. So in case you will have any questions, feel free to reach out to us via azure.com, where we could have a chat per your particular project. And I do hope you will find an interesting journey, how you could play with all of those technologies that we will cover today. And we've decided that literally instead of long product story, we would rather invite those heroes who are using our Azure services to rock across the world, who are very close to your favorite topics like blockchain, insurance, fintech. And we've decided to invite CTOs, co-founders to those chats. And on top of today's session, we'll also have a discussion tomorrow. And with that, I would love to pass my voice to my guest, who will just introduce himself, who is a blockchain veteran, who is dealing with a lot of data, who is on the forefront of many technical conversations at his startup. So Dragos, maybe you introduce yourself and then we'll have a small conversation.
Yeah, hello. Thank you for inviting me. First of all, happy to be here. And a short presentation on me. I'm the co-founder and CTO of Modex, a blockchain company, a blockchain database, which is our main product. Other history, what I've been in this domain, an IT domain, from more than 20 years. And in the last 4 years, I focused on blockchain technology and how we can bring it to enterprise level. But that's my short presentation.
Great. All right. So we invited you because you are having like a solution which is quite advanced. You know, my colleagues are saying it's a true deep tech solution. We try to pitch it to our enterprise customers who've been saying, okay, do you have any Azure-ready startups who are dealing with data, who are working on real blockchain projects? So how would you introduce yourself to the audience who is listening to us? I mean, from your product point of view.
Product. First, let's name the product. We called our product Modex BCDB, which stands for Modex Blockchain Database. And before, let's go a little bit in history here. We started a few years ago when the blockchain domain at that moment was about crypto. And there's very few companies took the blockchain actually and took to look how can we use this piece of technology into an existing enterprise, into an existing industry. So we took this approach and we wanted to simplify the adoption on the enterprise level. So other companies started to build their own blockchain. Other companies start to build the databases to work like a blockchain. We built a middleware. We built a middleware that linked these two together. So if an enterprise has a database provider, he can still use that database, and through our middleware can bring the blockchain component and actually brings the features that the blockchain can bring, the immutability, the data traceability, decentralization. So we build our solution to be agnostic on these two levels, blockchain and database. So you can use any type of database that you want. And on the blockchain, if you are comfortable with a specific blockchain on the market, you can use that when you start building your network. And this word network going to be on a lot of lips when they are talking about blockchain, because we are building networks here. And using this middleware and this agnosticity, we managed to create a data immutability replication among different type of databases. So with the help of the blockchain, that is in short what our product is. Because I could talk about this for hours. We have minutes.
All right, so I'll try to ask you some questions around this. All right, so when we are working with startups, we are having like dozens of scenarios. Some startups are using simply a couple of our Azure services. Some others simply are working with our customers, like biggest enterprises who are using Azure and then trying to deploy something on their infrastructure. But I feel your case is quite unique because literally you will be featured actually very soon in our Azure Marketplace. So I'm really curious, how would you sum up the ideal target group, or with whom you already worked to deploy your particular solution? And then I will ask you, where is Lyric Crowd there?
So where I'm going to, who's the target? So who need a blockchain framework, who needs to keep their databases. They want to build a product that some of their features need a blockchain features. And when I say blockchain features, there are many of them. For example, decentralization, I told you, data immutability. For me, from a technical point of view, is immutability. It's the strongest point at this point. So even if you want to use services like SQL Server or Cosmos DB, Azure Blockchain, you can bring this our technology, our middleware, to connect these two dots of the blockchain and the database, and to use it in your solution as you are working with a normal database. So that our target is the companies that they want to build new solution, companies that want to integrate their existing solution, that want to integrate the blockchain component, and also we are building integration layers with existing solution like Microsoft Dynamics or other software as a service that acts there, and they are providing way to integrate with them to create the flow of that it matters to be on the blockchain.
All right. So then, when we should call you? I mean, let's imagine that we are having a conversation.
When should they call us? For my point of view, if you don't know nothing about blockchain, yes, and you don't want to spend a lot of time thinking what blockchain is, you should start immediately with us, because we are from the beginning. We are an abstraction layer on top of a blockchain and that database. So even if if you want to build a new product, is the far easiest way to choose us. If you want to integrate an existing one, there is a period of analyze there to see how easy is to integrate with that, and what are the choices to integrate that. But for sure, if you want to call us from the beginning, because it's not. I'm not saying it's hard, it's very difficult or not impossible after you already started, but maybe you lose time and money if it came after. Basically, you could have some expenses cut directly.
All right. No, and I'm calling your case very unique, because usually with startups and enterprises, we are sitting together and say, okay, so that's the particular puzzle that would be a perfect fit for your need in Azure, like Azure Blockchain Service that you mentioned. We are then trying to connect with other services like Cosmos DB, if we need the compute power, and then we are running a virtual machine. But we are having a unique set of startups who are working with us, who are providing something on top. So literally understand that you are at the end providing some value on top of those first-party services that are in our cloud or any other cloud, because I know that you are quite diverse when it comes to what kind of solutions you are supporting. But how you would see that the conversation, how to build the blocks, how do you love to work with customers? You mentioned that we should call you when we are starting the conversation, but what will be the process? How I might use your database at the back end of my blockchain solution?
We started with Azure through our Microsoft Startups program, and with the help of the Fast Track program that we have been accepted there. There was huge help from them, and we provide our solution as infrastructure as a service directly from the marketplace. Our idea was how to provide a easier, a fastest way, clickable infrastructure, and Azure provides that. For me, cloud, it's infrastructure at a click of a distance of a click. Okay, so you can click there and you build an infrastructure. It's far easier to use cloud to have your infrastructure than to build your own on-premise. We built one. We have one on-premise, and I know the cost and I know everything. But we build it for development, testing, demos. Production, we went on cloud. So we say when you have to call us, not necessarily call us, because we want to be on Azure Marketplace. You can find it there. You can start from there. If you want something custom, you can then go to channels, to partners to build something specific. But we want to give you power to build. We create a tool for the customers to build their own network. We do not provide the software as a service. We especially go on infrastructure as a service, that the client, the customer, to be the one that's has ownership on the infrastructure of the data, and when he brings other parties to his networks, then those party becomes the owners, and when other party has to come, those party has to agree, and so on. So you can build a blockchain network, a blockchain database network, to be more precise, with permissions. So it's not something that you put it on public. It's not something that you have to use some crypto or some proof of work and other guys to decide your consensus. It's based on your blockchain framework chosen by you, and the database is chosen by you.
Okay. So we are going ahead in the journey. So that's really great. And to give the audience more heads up, Azure Marketplace is a kind of place where you could find those solutions which could run on top of your Azure subscription. So for example, we are working with communities, even those open source ones, who are listing their code directly to the Azure Marketplace. And in case you want to build your Ethereum-based infrastructure with few clicks on resource templates, we could immediately have something up and running. And we partner with startups like Modex, who are also using the Azure at their backend, just to be sure that at the end you'll be able also to find more third-party solutions. And at the end, actually, at the end of the month, you will see one bill. So you don't have to somehow be obsessed about this. So you could bring your license to Azure. You could start new solutions directly from Azure. There are several cases. So in case you are the SaaS, either IaaS startup like Modex, have a look. We are running several webinars and office hours where we are showing more how to integrate with Azure Marketplace. And Dragos, when we've been preparing for the short chat, I remember one of my 5 questions was, to you as a CTO who is dealing with many challenges, I mean, on the data and the blockchain side, and devs love to, at the end, think about the end solution, but at the end, it's a process. So there are many challenges. You know, last year I've been speaking during the Decentralized conference in Greece around Azure Blockchain Service. So most of the questions were, okay, how I should prepare for the true blockchain project, how to adjust my data, how to clean up a little bit the data sets that I'm going to use. So what kind of tips at the end you would give to those folks who are listening to us, who are at the end trying to explore that interesting but challenging world of blockchain or the data at the end? What would be the next step for them? The folks in technical roles, either business owners who are dealing with that amazing opportunity, So any tips that you could share from your CTO hat point of view, that would be great.
So how to prepare their data? First of all, they have to find out which process needs to be backed by a blockchain technology. Not all process, not all application has to be on the blockchain. And now, regarding the blockchains, if you're going on the blockchain service, which we avoid to do that due to our customers that always ask us who's going to own the data, who's going to own the infrastructure, always stay apart from a blockchain service. So we wanted to be basically to provide the customer the way to build the infrastructure. But how they to build to keep the data? First of all, as I said, business flow. If the business flow is there, if your partner has the same data, then you find a way that to bring your model. Now I'm going back again with Modex BCDB on why I build it, on why we build it this one. Because with Modex BCDB, actually the layer of database layer, it's modeled at our level. So we discuss with each database, we know exactly what is the data model there. So we can map the specific data from each database and to bring a common layer. Because what we have to share between nodes in the blockchain network has to be common data. It has to be data that you are able to share it. And even more, if you have data that other parties are not allowed to see, you have to specify that. You have to make sure that you are sharing to the one who has to see that data. And in the normal blockchain, some have this capability, other doesn't have. Our solution, for example, has out of the box this type of features when you can put some policy on the synchronization level. So this you have to think about what data should I synchronize? This party is allowed to see my data, this party is not allowed to see my data, or what data should I throw the raw data to them, or should I put it to a smart contract like that will query the data and they're going to see only the statistic of data. So there are a few questions but you start with the business flow first, then you see what are the parties involved, who has to receive the data, what are the common model of the data that has to be on the blockchain. This is for my small tip on the architecture when you start thinking on a solution and building on top of a blockchain.
Right. And actually, I remember our short calls before, we've been trying to say, in case you are a blockchain startup or the data startup. So what's the future for your company? I mean, which direction you want to go?
Blockchain structure, database structure.
Yeah, what's the direction? They want to go more into data and maybe also work with those customers who are not always convinced for blockchain. Either you want to be a specialist expert in the blockchain space.
Our focus here is regarding the data that is stored on the database. So our middleware is actually enhancing the database, the data from that database. Is enhancing the data to make sure that the data stay immutable, the integrity is there. You can look up in the history to see if anyone changed it or not. Basically, we are an improvement on the actual replication systems. We do not replace them. We basically came up as a layer of improvement on their bring this immutability on the replication level. So I'm going to stay on data, not something that are going on. They are together, blockchain and database. Blockchain store some data. Blockchain, the database is going to keep the actual data. Because all the existing solution on the market, they're using a database now. Even the blockchain is not using the back, but the way it's structured is not built to store huge amount of data. So he's there only to provide the blockchain functionality. The immutability, the centralization are always going to be the same. If you need one of these features, if you look on the blockchain, what features bring it, and if you need two of them, then it's easier to look on the market what's the best solution for you to build a better solution.
All right, then we have 3 more minutes, as I see on the clock. So, where I should go to learn more? Do you have any documentation?
Documentation there on the website. We're waiting for approval on our template scripts. On the first release now, we have on Azure only simply the classical services. We're planning in a couple of months to integrate with Cosmos, Azure Blockchains, SQL Server, even Azure Kubernetes Service. And this one is a tricky one. If anyone from audience going to hear someone, I'm going to deploy a blockchain network into a Kubernetes cluster, put a question mark there because it's very dangerous. If you don't hear clusters, you do not have a blockchain, because a single Kubernetes cluster beats the purpose of the blockchain. Basically, it's like you deploy a blockchain on a single machine, and when you pull the plug, all the blockchain is down. So when you talk about multiple clusters, and that's what we want to achieve, to deploy, to integrate as much possible Azure service to our solution on a deploy side, or as a solution that are using data or they are storing data, because we are a middleware between those. Who's storing data? Who's reading data?
All right then. And for the last minutes, I want to also address those startups who are listening to us. So I love Modex example because it's the company who is not only using and trying Azure at their backend, but definitely is also trying to help our Azure customers to connect many advanced services, either on top their own intellectual property, and you could find it through Azure Marketplace. And like Dragos mentioned, you could go to modex.tech to learn more. We want to see more startups who are going to play with Azure like Modex. We are having more than 150 cases of startups using Azure on our customers Microsoft.com site, where we are featuring public case studies. Have a look. Also, there are many enterprises in the field of finance sector, insurance, and so on, and you could learn how they try to find their way towards using all of those services, which we do have currently in Microsoft Azure. In case you want to ask me what will be the first step, have a look on the slides. Go to Microsoft Learn. We created a dedicated site where we aggregated best courses for technical founders. And I do hope that will be a great journey towards you, towards your challenges that you do have. And have a look also on Azure free accounts, where you could play for free with all of our services. Even you could play with Azure Kubernetes service, Azure blockchain service. You can run several virtual machines. Yes, we support also open source. Fun fact is that more than 50% of VMs in Azure actually are based on Linux. We are constantly adding the support for more frameworks, more distributions, and still we're relying on great community members who are constantly enriching the Azure services to what they are uploading what they are featuring as the offer in Azure Marketplace. Have a look in case you want to scale for Azure Marketplace. That's I feel strong value prop for EAS and SaaS startups. And with that, Dragos, really thank you for your time. Fingers crossed for your company, folks. Follow them on LinkedIn and directly on Twitter. And in case you are staying with us for the second day of the conference, have also look on the session that I will drive with OS, another amazing startup who is up and running on Azure and who is targeting finance-related challenges. And we'll have a chat tomorrow. And with that, really thank you for your time, that you stay with us, and wish you a great rest of Shift Money conference.
Thank you.
Okay, right. So we come now to, I said before it was the last one. It's a surprise. We've got one more right now to finish off day one of Shift Money 2020. So this is all about building or buying an orchestration platform. Is it a good idea to build it yourself, do everything yourself, or is it a better option to literally hire somebody else to do all the work for you? I don't know the answer to that, but the next gentleman, he's going to give you a few ideas and insights as to and to help you perhaps make the decision for yourself. Ladies and gentlemen, here on stage on Shift Money 2020, the last session of the day is very simply the VP of Partnerships and Strategic Sales from Payoneer, Lokan Sim.
Everyone, thanks for joining today. I'm really excited to go through this session with you today around build or buy a payment orchestration platform. First, quick introduction to myself. So I'm Lokan Sim. I've been in payment acceptance for about 13 years. Spent my time across tech, product, sales, and product partnerships. And with merchants, I've been spending my time trying to help them get their perfect payment set up. And then with platforms and shopping carts, helping them become payment and with some of them financial services companies. And really, I think the key piece I took out of those times that's relevant for today is just as the years went by, the number of companies that were picking multiple payment companies to be their in their setup, as opposed to going down that one provider route, just seemed to be growing from my perspective. And I think like when I started out 13 years ago, the concept was fairly standard of I'll take one provider for the US and one provider for Europe and one provider maybe in another country or territory that I operated in. And there wasn't really that concept in a mature world of I'll take two providers and kind of face them off to each other. Discussions internally, having some of this context and background is really helpful to, one, align it to your company, and two, as you go through these discussions and business cases and so on, whatever the side of the decision you sit on, these snippets and this understanding is really helpful for yourself and for your colleagues to go through. We'll then progress on to kind of the aspects of what's included in a payment orchestration layer, whether you build or buy. And then we'll talk about kind of the future of that. What does it look like in 3-5 years' time? We talk about some of the things that you miss out on when you go down the build path. And then we talk about some of the realities that we've seen when you do go down the build path. But then we also kind of finish this topic off on a case study. And then also when is build the right, when is buy the right, and also raise this question of like, is there a hybrid that's in the middle that allows you to take advantage of both? And then we close out, and of course, like with my contact details, you can feel free to ask me any questions as well after this session. So without further ado, kind of let's kick off. And as I say, like, I think one of the most important things for us is like explaining the history of like why orchestration is like coming off and kicking up in 2020, and why didn't it come around 2015 or 2010 or any of the other years? And really, I think like we've listed out a few of the reasons here that we think were like real deal breakers that meant this industry couldn't have even existed like in any real sense, and why as this trends continue, you can start to grasp that actually this looks like the tipping point, this looks like that hockey stick growth in terms of the prevalence of orchestration instead of the build and building it in-house route. And I'll take the first one, right? This is one of my favorite favorite points was around the on-premise versus the cloud. Like 10 years ago, on-premise was certainly a lot more common then than it is now, and cloud was still in its infancy. And you can imagine as a startup, we would have two choices, right? We would either kind of build a data center and go out there and try and pitch our data center as the place to route your traffic through. As a startup, I think that's a very hard pitch in terms of rocking up. Like you could imagine we get on a plane with the founders, we fly over to San Francisco and Palo Alto to pitch to the tech companies to say, hey, we want to be your orchestration layer. And then kind of it falls down when our data center would most likely be in Munich because that's where we're based. And you can't really sell your startup's data center to a large global brand. The other side of that, right, you could increase the chances of the startup and you could say, hey, well, we could go out and build a bunch of data centers alongside building out our orchestration layer. And that doesn't That's just not realistic, right? It's not the way you can build a business. And then the last thing is the alternative would have been we could have provided a CD with some code and merchants could have run it on an on-premise on themselves. Either of these, right, they're time sensitive in terms of like their lifespan, but this really was a blocker for us. Without the cloud, like orchestration doesn't really exist. And I think like lack of trust in the cloud is also a key one, because when you get to that point where like we've gone from time where like cloud really didn't have much trust, and then some people and some verticals and some industries picked it up and some geos quicker than others, which has been really good to see. And I think now we're getting to that level where there's obviously a lot more trust in that space. But like even from our point of view, let's put us back in that room in like Palo Alto, and we're pitching to one of the tech companies to say, we could do your global processing. As a startup, we're going to have our data center. We would hopefully have a redundancy data center. But it's like, if that fails, right, it's just not there. And if we went in with the cloud, a single cloud, where we've seen time and again that some of the clouds go down, and it's only really recently that we've been able to take advantage of cross-cloud. So like, for instance, we're across Amazon, Google, and Microsoft across the globe. But that's a recent initiative, right? And again, like 10 years ago, that couldn't have happened. And I touched on it earlier as you drop down that list of like, there's been no truly global payment providers, say 10 years ago. And that put you into that logic to say, hey, I'm a business, I sell in the US and I sell to EMEA. I'll take one in the US and I'll take one provider into EMEA. And the concept of that A/B testing for acceptance or cost or playing off each other for the roadmaps, like that didn't really exist because there wasn't the chance to do that. Whereas if now you look at it, there's a good number of really strong global providers. And then there's also this other tier that's coming up, which is regional providers. Like you look at Latin America, the rise in quality providers in Latin America is phenomenal. Similar things are happening in Africa. Similar things are happening in India and a whole bunch of other markets. So now the decision is a lot more difficult because there's a lot more providers to choose from. But on the flip side, as a payments lead, you've got that opportunity to say, hey, if I play this right, and I do take an orchestration in-house or bill, I can now start to actually play these providers off each other so that I get the best service for me and my customers and my business. That's something, again, that's fairly recent, right? It's not something that's been around even 5 years at a high level. Dropping down one further, like when you look at the use of AI and ML in payments, like this whole like buzzword bingo, I guess, but like, again, this concept of if I was a brand and I was looking to see who gives me the best acceptance rate in North America or across Europe, like what was fairly common was like you would bounce acquirers off of each other and say, if it declined here, I'll try here. And if it declined here, I'll try here. But like the concept of where we are now, which is like real smart intelligence that says, well, this issuer wants this type of authorization request. This issuer wants this type of authorization request. Like there's real intelligence in the products. And this intelligence is what is also driving the need to orchestrate, because as brands, you need to take advantage of this. And if provider A develops some really good intelligence and provider B, you shouldn't have to pick between the two. You shouldn't have to say, well, I have to give all my traffic to one. You should be able to say, hey, if they're making smart products, then I want to take advantage of both their smart products and see which one's the best for me. Because the industry is moving so fast, who knows what that's going to look like in 12 months, 24 months. And if you've locked yourself in for 3 years, you can't keep up with all of this change. Dropping down one more, right, to the fraud tools. I think from my experience, it was fairly common that you'd see merchants take the fraud tool included in with the payment company that they were purchasing from. And I think whereas now you look at that model where you've got the likes of Ravlin and Forta and Riskified and Signified and Sift, and there's so many more quality names out there that, again, like back in the day when it was just like, I'll send my fraud to the same payment provider, the integration's fairly straightforward for that. But when you're now in this world of, hang on a moment, I want to take provider A as a fraud tool across all my traffic because they're really good, but then actually I want to take advantage on some certain transactions from those chargeback liability providers that are in the fraud space. Like all of a sudden you've started to get into the concept of orchestration with just fraud, let alone payments. And I think like that's where things start to get like really, again, complex or interesting, depending on which side of the table you're on. And it's like that element of orchestration, again, is like, there's a lot of brands out there saying now, like, why do I have to build that logic? Why do I have to maintain that? That's heavy effort on my side. Again, I would like to push that out to a SaaS company who's just going to do it for me because it's fairly standard. What is applicable to me is just the logic of which particular transactions. Dropping down to the last point, where we were before, like from, again, my experience, a lot of the interaction that we had was engineers, software engineers who were doing the integrations to payment companies because they were fairly like straightforward, right? You didn't have too much orchestration. You didn't have 3DS2 everywhere or 3DS. You didn't have the concept of account updater and network tokens and these advanced fraud tools with the JavaScript. You didn't have all of these like complexities. And some of those payment integrations back in the day were like fairly straightforward. So you could have this concept of software engineers, like with some experience, could do the integration to a payments company. Whereas I think like now you're at this place where software engineers have actually gone further and you've now got these specialists of payment engineers or payment software engineers, and they're in high demand because of a number of companies built their software. Like Uber's a great example. There's others that are out there. Zalando's public about their payments team. And therefore, these engineers are specialists in their field, and there's not enough of them. And that puts them in high demand. It means that they're expensive because they have a great negotiation power. And therefore, businesses are saying, like, hang on a minute, like if it's hard to find payment engineers and I've got this huge backlog of things, like when I do get my hands on payment engineers, like I want them on the most valuable topics possible. I don't think I want them on the basic side. I don't want them on the table stakes. And I think like that's, again, another piece that says, hang on a second, can I get this completed by a SaaS company who's just going to charge me a small fee versus like the cost that I would get as employing a team or even a bigger team. And so like, I think like a lot of what's come out of here is history has forced brands to go down the build path. But as we like transition over to this, you have to build so much that it really does become like quite a big beast. And I think 10 years ago or so, like sticking with the history theme, the effort that went into this meant that there wouldn't be so many boxes on this page. But as time goes by, you're definitely getting more boxes just because of the way payments is evolving, because of the rate of technology change. And just to like build this out, like many of you will have seen a layer like this. Many of you will have a layer like this or a diagram like this in your business. But like just to explain some of this, so the e-commerce layer is the storefronts. So that could be different geos or different sites for different geos. It could be different channels. So it could be the store, the app, or the online. Could be the call center, any way where you'd integrate that payments application. And then you've got the payment platform layer, which is all of the components that go inside that payment platform, whether you build or buy it, just depends who's building it. Then you've got the external payment services layer, which is those third parties that you connect to that are performing a function that isn't related to the processing of the payment, but again, you don't do it yourself. So an example of these would be that chargeback defense tool. There's a number of providers that offer that. And they help you with that service. Obviously needs a connection to the payments layer. And then the last one, obviously this mix varies per customer and per merchant, but here you'd see like multiple providers across payment, fraud, payment methods, and then even like gift cards and things like that. And I think, as you say, like we go through this, like each box becomes a standalone product. So each one of these will have its backlog of features, its roadmap. Each one is going to take some effort to research, like what's the vision of that product? Where should it go? Like it's going to have its own security assessments. It's going to have its own monitoring and maintenance. And I think like if you just pull out one of these as an example, right? 10 years ago, particularly in North America, it's fairly common that you would have the payment page would collect the raw card details. PCI comes along, or PCI DSS comes along, and off we go. We come off of that. And we move now into a hosted payment page or a client-side encryption. And that's a change, right? You had to make that change to your pages. It's fairly substantial in some cases. And now you look at that and we're looking at hosted fields. And after hosted fields, we'll have the next step. But before we get off that next step, we've now got like what's come along as well that impacts the payment page is tokenization. We've got 3DS. We've got more payment methods. We've got a whole bunch more things. And I think like 10 years ago, you wouldn't have had such quality field validation. Now you've got fantastic field validation. And the point here really is like each of these boxes like grows in size every year that goes by. And ultimately, it will also have a whole end of life product life cycle in here as well. So you have to decide when to kill the product and rebuild it. You'll have to kill the product because it might not be used. And this is just a lot of maintenance and overhead that then an operational expenditure on your business. And again, like if you're set up for that, then I definitely understand why it's there and exists. The question really becomes is like, who looks after this? Is it in-house or do you take this table stakes from the outsourced company? And the last thing I say, like kind of touched on it earlier, is that the more boxes will appear. So as technology improves and evolves, and as more of the world comes online, and as more of the world becomes accessible for others to sell to, and as more as like payments just becomes more and more detailed and deeper depths of its functionality, but also like we're already seeing the linking between payments and loyalty. And I think like all of this is going to explode in terms of more connectivity, more integrations. And again, it's that focus on, do you build it or do you buy it? Moving on that topic, it then kind of the last bit, which I think for me, this is one of the most important discussions that I have when I'm talking to these merchants, but it's also, I accept fully that this is one of those hardest to quantify like components or two assessment areas of the build or buy strategy. And it really helps. It's more of a philosophical point, I think, around like, where does the leadership team, where do you as the payments lead want this to be? And I think like those two benefits, like to drill into them a little bit, like the first one around performance benchmarking. If you decide to build things yourselves, it's really hard to benchmark with your peers because it's your technology. It's typically fairly like private. There's not much exposure out there in terms of like, what are your response times like? What's your uptime like? What's your downtime like? What's your best security standards? I think we're still fairly like young or infant in terms of the payment community of sharing how it really works. And then you've also got like the performance of transactions. And I think it takes a lot of onus on yourself to then go out to the community and the network and really try your hardest to benchmark. But you certainly would find it really hard to get data feeds in to say like, hey, we think this is not performing as expected because we've seen it elsewhere. Like that's a really hard thing to do when you build it yourself because you don't have access to that data from other merchants. And it's always going to be hard to put a proof point on that, right? Like we've seen customers of ours like uncover a new retry strategy or a routing logic, and they're more than happy to share it. But like, will they invest the time to go out and share it themselves at a conference and build their own network? That doesn't always happen for many a reason. But us as the platform that we enable that, then therefore we're able to share that with our other customers without them having to do anything. And I think it's a philosophical point because it's really difficult to calculate. Similar to that on the shared product roadmap, like this one with transparency has two sides, right? You have the when you're building, you own your roadmap. So you are free to decide where everything goes in terms of that and priority, in terms of like how big that roadmap or the backlog is, how much resource goes into it. When you buy, you don't have that emphasis all the time. And that has pros and cons. But on the pro side of things, like a lot of this happens around like, I think a great one is sticking with the retry logic is we see so many times with customers where they're like, we want the latest retry logic, but if they've built in-house, where do they get that knowledge from? Like they have to network themselves. They have to read. They have to go out to the colleagues that are in the industry. They have to absorb it from the payment companies. And I think this is best summed up by like, if that's a payments team, they have their network. Now compare that to a software platform that is connected to 100 plus of the providers to absorb all 100 of their knowledge. Then you've got like the schemes with the connections to them. And then on top of that, you've got all of the merchants that are on the platform. That shared pool of knowledge, but then also product features suddenly becomes really interesting, I think, when you start to compare, hey, I want to retry version 2 for my platform, like, is it going to be quicker, and is it going to be a stronger ROI on build or buy? Obviously, it's a very, very personal question and subjective to each merchant. But again, the philosophical approach would suggest that there should be a number of benefits that come from the right platform that you buy, that actually those products and those features just get delivered to you as you would expect as the feature and the platform evolves. So you're actually not having to spend that effort going out and building Retry Logic version 2. You're consuming that as another feature that comes out every week or every month or every fortnight from the platform that you've purchased. So there's definitely two sides, but it is beneficial in multiple occasions. And then this touches on it as well, right? The concept here is, like, I think from the discussions that we've had, our leadership team, myself, the number of merchants that we've got and the number of merchants that we've spoken to, it seems to follow a pattern of about 85% of resources go towards the development that every company is doing in a similar sense. And like the background behind this is, like, when you go out and set out that decision of build or buy, you might have, say, a hypothetical 50 features that you're making an assessment against, and you're saying 50 features, I can do this. We're going to build. Okay. And then just as the project slips, you're now kind of putting in doubt your go live date, and certainly in some of the larger companies, projects do slip, or it might be stuck in the approval or sign off or the resourcing of finding the payment engineers. So you might cut a couple of features so to ensure that you remain on time. And as the project continues, it's the first time you're building with the new team, so therefore you cut another couple of projects. And then, again, hypothetical example, you might be down to 40 or so features that are on there. And then even within that 40, what we often see is, like, let's say you set out to say, we want to build the best retry logic. What typically seems to happen is that really gets cut on V1 of the launch. And then you're fighting back to the business case to get resource to go and make V2, V3, V4. And it's really hard to watch that. And I think, like, our point here is, like, with these discussions, we've got some of this experience where we can start to pinpoint and play the kind of the sounding board in terms of what really happens when we see these payment platforms being built in-house. And like, looking at the slide, right, there's kind of 85% of these features are just common features that are built, like building the integration to the PSP, building the retry or the error handling, doing the credentials management, doing the security, doing the hosting, doing the analytics and the business intelligence to make sure the monitoring's there. And then you've got the routing topic, like, let's make sure the cascading logic's there. Again, how do you handle errors? All of this stuff is, like, it's really not that specific to each and every business, and therefore it's just repeatable. So, like, if you go down that path and do it, and company X does it too, and company Y, you're kind of doing the same job. And what you're not getting is much time to do the 15% of the bespoke work. And it's the bespoke stuff that is, like, I think everyone's dream, right? Like, that's the stuff that we want to do. And case in point here, I think, like, I was talking to a company that offers loyalty points, and you can use those loyalty points to discount the purchase price. The reason that loyalty program was invented was really to help reduce the interchange costs that they were paying. If you can reduce the ticket price, then you reduce your interchange costs. But that project was stuck in, like, the get-go because it has such an impact on the payments layer and the routing and just a number of the connections that they really didn't get to offer what they wanted to offer because they were having to build the basics, the token vault, the retry logic at a kind of basic level, the security, the hosting. And on the flip side, when you go out to the customers that are actually going and just buy the platform, they don't have to deal with some of this, like, mundane table stake stuff, and they do get the chance to focus on more on the bespoke activities. And I think, like, this is one of the most frustrating discussions that we have, I think, from our side, is just, like, watching that happen and just, like, watching this process, like, unfold. And we do our absolute best at the beginning. And this is why, as I say from the very beginning, like, we're very confident in the mission of our company, with the product vision of where it's going, that we really do just want to make sure that we try to help people be as informed as possible and really understand the decisions that they're going to take, but also, like, what can happen post that decision and how it can impact actually what you're going out to select. That's definitely something that we try our best to do, and we're always here for a conversation. And then touching on that, like to this point, as a case study. And as we go through this study, the real point that I want to pull out is like these are real numbers. You can see that the orange of make is significantly more expensive than the pink line of buy. We can't reveal the figures because this is a real life customer, but it talks to the point of Dan Kingfisher, a plus $10 billion merchant headquartered in the UK. Like, they're just not a payments company. They don't have that experience. They don't know how to go and do this. They went down that buy route and transitioned from kind of a form of built. And I think what's really important though is this isn't always the curve, right? Like, this curve is very much in favor of the buy from a finance point of view. And it's representative of just the technical effort that's involved in creating a payments layer. But it isn't always this case, right? Like, I've been in a number of meetings and workshops where ultimately the graph turns out where the orange and the pink line are a lot closer together. We've even been in some where actually, like, the pink line is above the orange line. I think the point I really want to make is that each graph is specific to yourself. And I think what we've done is a really good job in terms of really trying to uncover with merchants, like, what is the true cost? Like, what costs should I put in? What should those costs be? And then by the sheer nature of us having done a number of these now and spoken and been around for a while, and also from the background of where our company like leadership has come from, we also have a really good understanding of just like what's a benchmark as well. So like when you go out and suggest that a cost of security is going to be X, like we can also understand like, what does that sit what we've seen from other companies as well. And again, the ultimate aim here is just to help you make sure you make the right decision for your business. And it's always going to take time. It's always going to be a really deep dive, but it's a great process to go through. I think the longer you look at it from like years 2, 3, 4, 5, actually that's when it really becomes like super interesting from a payments person's or payment lead or payment owner's role, because that's when you start to look at really the dream. That's when the investment pays off. That's when you're really like nailing some of the value that you're bringing. And that really touches like on this slide, right, where we talk about where it is the right option. I think as we go through these discussions with merchants, and we had this discussion just this morning around like the build or buy scenario with one of our customers and one of our merchants. And like when you look on the left-hand side, you've got kind of this sliding scale of your current payment setup. And on the right-hand side, you've got the payments team or the payments owner dream. And this is what we see as common, right? This is as close as we can get to if you're this type of business, build might be better than buy or vice versa. And really what we ask customers, so merchants, to do in our discussions, and we help them with this, is really understand what's achievable with the build model that you've got. And like, how can you get there? And if there's a big, or if there's a small delta between the payments team dream and the achievable with build, like build is definitely a great option to deep dive into. Like when you consider kind of Uber's fairly public about what they do with their payments model. LinkedIn's also released some of theirs. Like when you look at that dream and you see how much they're investing, you see how much work's going into it, you can start to picture that what's achievable is actually fairly close to the dream. And I think that's awesome, right? When you get to do that, like it's amazing. But that's not always the case, right? I know many a payments team, some of my friends that are there, they have their current payment setup, and then you have their dream of where they want it to go and where they know it can go if they had the resource and they had the budget to go for it. But the achievable with building is way too far to the left. And therefore, what actually could be the best option is what's achievable with the buy model. Because when you buy, you get all of that table stakes that I was talking about earlier. It's included. And therefore, what you really get to do is start to look at that value add and how do you link payments to loyalty? How do you build a fantastic routing logic? How do you build the best retry logic for your customers? How do you get to the geos that you wanted to get to but you couldn't do? How do you optimize that payment page without having to go back to the product team and build a whole business case around it? How do you not have to face that challenge of, well, if it isn't going to bring us $500,000 in net income this year, which just doesn't make the payments backlog? How do you you don't have to deal with that 18-month backlog so much that you've got, and all of a sudden you're freeing up your resources to do the more valuable things that get you to that dream. And I think the best thing about the role that I have is you get to the dream bit, and when you start to take away a lot of the table stakes, you get to have the discussions where actually the dream can be pushed, and you can push it further to the right, which is why we always put the payments team dream on the buys. Quite often is pushed further right than the dream that's with the build, because you're not having to worry about the table stakes. You've got more mental capacity to go actually and think about what's possible. And I think that's where it's really good. And I think it's always hard. I think it's very difficult to say, well, you're in this vertical or this size, or you've got this many adapters, and therefore you should build or you should buy. It's a really difficult conversation. Or I've got a strong tech org who have the engineers sit next to them in the office, and the CEOs there, so they always get funded. It's really difficult, and that's really hard to kind of predict. However, kind of this achievable to buy or achievable to build is something that we see is so far for us, it's been the most fruitful with the customers and helping them understand which side of the table they should go to. And then the last thing kind of from my side is I talk a lot about the consultancy and the conversations that we have with our customers and our merchants. And I touched on it at the beginning about the belief that we have in our vision and our product vision. And this is our point. Our main piece here is that we want to help our customers and our merchants make the right decision on build or buy. And you can see on the slide, there's a number of activities that we do that try to help customers on that path. The other thing I want to raise, which I touched on at the very beginning, is that it doesn't have to be build or buy. This isn't 100% this or 100% that, or an either or. We are looking, and I think probably the most exciting piece of the discussions I have with customers is around this concept of a hybrid, where actually if you've already built a lot of this infrastructure or you're already on that path, you don't want to rip it out. It might still work, and if there's no reason to rip it out, then how do we utilize the asset that you've built? How do we build value into that? And I think a great example of that that we were having a discussion with earlier in the year, or earlier in December, is around a customer that we were working with. They'd already built the integrations and the routing to which providers, and they were happy with that. They were okay. They didn't want to move, rock that boat. However, what they didn't know was what was the best retry logic. They didn't have that intelligence in-house. They knew that they didn't. They had great intelligence, but they knew it could be better. And they didn't have the product really to do that. And their backlog was just a 12-month backlog. And that's after you've gone through the business case, after you've raised the vision. And so therefore, what we're talking to them about is just the kind of microservicing, for want of a better buzzword, of services, so that you can start to hybrid model your build or buy decision. And with that, I leave you. I say thank you for listening. My contact details are there, so if you have any questions at all, then please do not hesitate to get in touch. We'd love having these discussions around build or buy. I think it's a fantastic topic. We're going to have a ton more content coming out on this. And yeah, would love to discuss this with you more. Thank you again. Bye.
Right, that wraps up the first day of Shift Money 2020. There we are. Day one is now, that's a wrap. It's completed for day one. And the thing is, if you've enjoyed today, guess what? We're going to do it all again tomorrow from 10:30 a.m. CET. Basically, Zagreb time, 10:30, we'll be kicking off day two of Shift Money 2020. Again, partnered up with the Singapore FinTech Festival. So again, a chance to really see and explore the many different stages and the content available for you as a viewer. Again, this will be available on YouTube as well. We have our hashtag Shift Money, hashtag Shift Money. So things you've seen today, things you've enjoyed, things you'd like to share within your networks, do so, and then we can enjoy again tomorrow, Shift Money 2020, day number 2 from 10:30. Have a good evening, and we'll see you again tomorrow.